Okay. So continuation to our last class, we have been discussing exemptions under GST. Few exemptions we have completed and we are left with some more exemptions. Please look into that quickly, we will complete. Take page number 133. Take page number 133. So now we are going to discuss import of services. When it comes to import of services, we have only one exemption. That is import of other than OIDR services by non-taxable recipient is exempted. Can you repeat once? Import of other than OIDR services by non-taxable recipient is exempted. Now we need to understand two things here. What are OIDR services and who is the non-taxable recipient? OIDR full form is what? Online Information Database Access and Retrieval Services. And in case of OIDR, they have given a definition that's an amended definition. So there is a possibility of asking this question because for May exam they did not test. So OIDR, Online Information Database Access or Retrieval Services, means services whose delivery is mediated by information technology over internet, which means that the service can be provided only through internet. That will be called as OIDR services, means majorly it will be through internet only or an electronic network, and the nature of which renders their supply impossible to ensure in the absence of information technology. So that service can be provided over internet and there is a requirement of information technology, then only it will be called as OIDR services. So can you give me some examples of OIDR services? All OTT platforms will come under OIDR services. Netflix, Amazon, Sony Live, like that. There are many OTT platforms. All these requires internet. Without internet, we will not be able to receive the services. So that's a OIDR service. Like that, they have given some OIDR services below. So such as electronic services, such as, for example, like that they have given. What is that? Advertising on the internet. Advertising on the internet, example, Instagram and YouTube. So Instagram and YouTube advertisement will happen. Without internet, is it possible to provide the advertisement? No. Providing cloud services, example, QuickBooks, Zoho Books, SAP, all these are examples of cloud services. Means the software will be placed somewhere in the cloud and we will be able to access that particular software and we will be receiving the services. Provision of e-books, movie, music, software and other intangibles through telecommunication network or internet. Example, Apple Music, Spotify, Kindle, all these are examples wherein we will be accessing the e-books which is available in Kindle or music through Spotify. So even Savan Music, these are all examples. Then providing data or information retrieval or otherwise to any person in electronic form through computer network. Example, Udemy, Canva. Canva, like that one website is there wherein if you want to get any design, you can get it designed through Canva. Photoshop knowledge is not required. Same way, there are some courses which are hosted in Udemy, some skill courses, and you can spend some 499 rupees, 500 rupees, etc. and you will be able to pursue that courses, okay, and that is this. Then online supply of digital content. So that is what OTT platforms, Netflix, Amazon Prime. Then digital data storage, your Google Drive, iCloud, OneDrive, this is digital data storage. Then online gaming, example, Minecraft, GTA Vice City, I told you already, online money gaming will not come under OIDR services, but online gaming will come under OIDR services, excluding online money gaming. So underline that, excluding online money gaming. Online money gaming will not come under OIDR services. And then, so first we need to understand the exemption. What is the exemption? Can you tell me? Import of other than OIDR services by non-taxable recipient is exempted. Rest and all will be taxable. Can you remember this easily? First, only one point you need to remember. Vinod. AC. So import of other than OIDR services by non-taxable recipient alone is exempted. So this alone you need to remember, rest of the things you don't have to. So two definitions you need to know. What is the meaning of OIDR and what is the meaning of non-taxable recipient? OIDR means what? Any person who is receiving the services through internet, any service which can be provided through internet is known as OIDR. What we saw was the list of examples, okay. Then, who is non-taxable recipient? Remember, easily, generally we are individuals. Whom we trust? Government. So, individuals trust government is non-taxable recipient. You understood? So, who will come under non-taxable recipient? Individuals. Trust. Trust means charitable trust. Government. Okay. These three people will come under non-taxable recipient. Who are those three people? Individual, then trust, and then government. Individual, trust, and government. Individual should be unregistered, importing services for personal purpose, whereas trust importing for charitable activities and government importing for other than business or commerce. I gave an example, you see that. Example, Mr. Arvind, a CS student, subscribed for Office 365. So, Mr. Arvind is an unregistered individual. He is subscribing for Office 365. So, therefore, import of other than OIDR services. For what purpose? Import of other than OIDR services? Personal purpose, na? He is a CS student. But see the meaning, pa. Don't look at my face, pa. See the book over there, please. Individual, unregistered, importing services for personal purpose is known as non-taxable recipient. So, Mr. Arvind is an individual, importing other than OIDR services. For what purpose they are importing? Personal purpose. Therefore, it will be coming under, this example will come under exempted, non-taxable recipient. Then, who is the second non-taxable recipient? But this also. Who is the another non-taxable recipient? Trust. Trust. For what purpose they should be importing? First point, can you tell me? First point for non-taxable recipient, unregistered individual importing for personal purpose. That point you understood? Then second one. What is the second point? Trust. Charitable trust. Importing for what purpose? Charitable activities. You can see here, Swami Nityananda Trust imports architect services for construction of Kailasa for advancement of spirituality. Yesterday I told you, advancement of spirituality is a charitable activity, correct or not? Now, architect services, is it OIDR or other than OIDR services? Other than OIDR services. Imported by charitable trust. For what purpose? Charitable activities. Therefore, it will be exempted. Are you understanding this? Then, third point in non-taxable recipient. What is the third point in non-taxable recipient? Government. Government importing for what purpose? See there. Please see there. Please see there. See there. Ayya, ma. See there. Government for what purpose? Other than business or commerce. For example, 360-degree video conferencing solutions imported by government from Cisco WebEx for the purpose of interacting with the officers. Usually, ministers will be interacting with the officers across the state through video conferencing, because minister will be located in one place. So, they will not be able to travel across everywhere on a same day. So, what they will do is that through video conferencing, they will interact with the collectors or officers, etc. and all. So, for that they need a video conferencing software. Is it for business or commerce or other than business or commerce? Other than business or commerce. Therefore, it will be coming under exemption. You got it? So, can you please repeat once again? So, what is exempted for import of services? Import of other than OIDR services by non-taxable recipient is exempted. What is OIDR services? Any service through internet is OIDR service. Then who is non-taxable recipient? Individual, trust, government. Individual for what purpose? Personal purpose. Trust for what purpose? Charitable activities. Government for what purpose? Other than business or commerce. This much you remember enough. Okay. Because right now we are discussing what are exempted and taxable. Then we will see when it will come under FCM, when it will come under RCM. You understood? Now, look into the next one, construction services. In that construction services, see the first point. Now, say I am a architect, construction service provider, and Mukesh Ambani has asked me to construct one big villa, and for which he is giving me 3 crores as the construction cost, and material and all he only purchased, and he wanted, maybe he liked Chennai, so therefore he wanted one big building to be constructed. I am constructing one building. Anywhere he can construct, because with the money what he has, for marriage itself he is spending 500 crores. So therefore definitely he can construct any building anywhere. So therefore he gave me 3 crores for doing only construction. He gave all the material required for construction. Now these 3 crores will be taxable or exempted in my hands. Read the first point and tell me. Exempted. Why? Construction of an individual house. Is it individual house? Yes. Irrespective of floor area or cost. Not as a part of complex. Is it as a part of complex? Am I constructing him an apartment where one flat he will be purchasing? Why he will purchase one flat here? So I will purchase one flat. He will purchase one building itself. You understood or not? So therefore it is not a complex. Individual house is exempted. Individual house means what? A house occupied by one family. Is it clear or not? But what is important here? It should be a construction. Repair of individual house, taxable or exempted? Taxable, because only construction, underline, only construction, not repair. Only construction of individual house. Repair of individual house will be taxable. Then, how do you know that it is house occupied by single family? There should be only one kitchen. Yesterday one friend asked me, where is he? One friend asked me, sir, what if suppose my family members are there in separate houses, etc. like that. Now more than one kitchen, na? So then it will not be called as a house occupied by a single family. Is it clear? When is it called as house of a single family? There should be only one kitchen. And in Mumbai, Mukesh Ambani is having very big house called as Antilla, like that one house is there. In that house, that is 28 floors house pa. In that one floor full kitchen only, you understood? But single kitchen. So it will come under individual house. To construct that building, whatever consideration that is paid to the contractor, that is exempted. You understood or not? Then read the second point. And what is the difference between first point and second point? First point is construction. Second point, construction or repairs. Underline, construction or repairs. For the first point, repairs of individual house is not exempted. But the second point, both construction as well as repairs. But first case it is individual house. Second case, project. What project? Pradhana Mantri Awas Yojana or Housing for All Mission. It's a central government project. Under the central government project, they are constructing a building, and for that building, if you provide construction service or repair service, the consideration received by you is exempted. You understood? But both these cases, it is not applicable for works contract, which means that it should be only a construction. Only a construction means labor service. There should not be any material involved. What is the difference between construction and works contract? In works contract, there will be goods element as well as service element. I will only supply the material, I will only do the construction. But in construction service, I will only do the construction, material and all I will not supply. Is it clear? The next, look into the third point. 1/3 of the gross value of the flat is exempted towards land or undivided share of land when the gross value includes the value of the land. What does it mean? That is, generally when you buy a flat, you are also paying for the land below the flat or not? You buy a flat here, are you paying for the land or you are paying only for the flat? Both land as well as flat. No one will buy only the flat. Automatically the land also will be given to them beneath that flat. But that land belongs to only that particular flat owner or all the flat owners? All the flat owners. For example, there is a 2500 square feet land. On the 2500 square feet land, 5 flats are constructed. Now, what is the undivided share of each flat? 2500 divided by 5. That is 500 square feet will be the undivided share. Which means whenever I buy the flat, I am also paying for the 500 square feet, my share, got it? Now in this case, sale of land is excluded from supply. Actually sale of building is only covered under supply, but sale of land also I am paying. I am paying for land also. So what they are telling, out of the total amount, for example, I am paying 75 lakhs for the flat. In that 75 lakhs, how much will be assumed to be the value of the land? Read that point. How much will be assumed to be the value of land? 1/3. So 75 lakhs into 1/3 is what? 25 lakhs. So 25 lakhs will be taken as the UDS. What is the remaining portion? 50 lakhs. On that 50 lakhs only GST payable. Is it clear or not? I gave the example below. Have a look into that example in the next page. When a flat is inclusive of value of land or undivided share of land, GST payable after reducing 1/3 of the gross value of the flat. For example, sale value of the flat is 75 lakhs. 1/3 of 75 lakhs is 25 lakhs. So what is the balance value on which GST payable? 50 lakhs. Sometimes they will give the land value separately. Even then you do the same way. Don't separate the value of land and on the remaining only you pay GST. See the second illustration. What will be your answer if the value of flat is 40 lakhs excluding the value of land and the value of land is 50 lakhs? 40 lakhs plus 50 lakhs how much? 90. Even though the land value is 40 lakhs, 50 lakhs, but we will not exclude 50 lakhs. How much we will reduce? Only 1/3. So what is the total? 90. 90 into 1/3, 30. Means 30 lakhs only we will reduce. Remaining 60 lakhs will be treated as a value of taxable supply on which GST payable. That too when the GST payable on sale of flat? When GST payable on sale of flat? Entire consideration after completion certificate or before completion certificate? Before completion certificate. If entire consideration after completion certificate, it is excluded from supply. So either before completion certificate or part consideration before, part consideration after. Then only it will be covered under supply chargeable to GST. What if entire consideration is received after completion certificate? First of all, it is not a supply and we don't have to bother about this particular computation. Is that clear? Then see the another point, transfer of development rights. So we have three things, that is FSI, TDR and long-term lease. First we need to understand what is that FSI and TDR. Just give me one sec. Okay, so see this. First we are trying to understand what is FSI. So what is FSI? Ratio of building or complex to the total area of the plot on which it is built. So that is on the plot, how many floors you are constructing, that total area is called as FSI. Okay, see this. So in a plot of land of 10,000 square feet, they constructed one big building. What is the constructed area of the building? 20,000 square feet. What is the plot area? 10,000 square feet. What is the FSI? 2. Constructed area divided by plot area. What is the plot area? 10,000. What is the constructed area? 20,000. What is FSI? 2. Which means if my plot is 2,400 square feet, how much I can construct? 4,800. If my plot is 5,000, how much can I construct? 10,000. Like that, FSI will be determined. Okay. In this case, FSI is 2. So therefore, Mumbai average they have given 1.33. Actually, in Chennai they are giving 1.5. In Chennai they are giving 1.5 as the FSI. In some places they are giving even 2 as the FSI. Main road and all they are giving 2 as the FSI. and suppose if it is like normal streets etc., they are giving 1.5, and some places they are not giving even 1.2 as FSI. So if the land is so weak, they are telling only one floor, you cannot construct beyond that. So this like riverside and all, you cannot construct 2 floors, 3 floors, only 1 floor is permitted. Beyond that if you construct, that is illegal construction. So because the river sand is there na, you cannot withstand for a big building and all. That's why past some time before it would have been river. So now they will not give approval to construct more than 1 floor. So this is what is called as FSI. Sir, who will fix the FSI, sir? FSI will be fixed by the local authority. Okay. So now let's keep it here. So FSI is determined by the local authority, and now what happened, I am having a land or house in Annanagar in a main road, 100 feet road. So therefore my FSI will be 2. I am having a land of 2000 square feet. How much can I construct? 4000, but I have not constructed 4000, hardly my house is 1500 square feet. What is the remaining FSI? 4000 you said, 1500 I constructed, what is remaining? 2500. 2500 square feet worth of building or construction I can make, but I have not made. Now one builder will approach me, India Builders like that, lot of builders are there na, India Builders, Naveen Builders like that, KG Properties, a number of builders are there in Chennai. So one builder will approach me, sir, anyhow you have unutilized FSI, you give me that unutilized FSI, I will construct the flats on the top of that, so that I will give you some consideration also. Now in this case what I am doing, already I am using only 1500, 2500 square feet worth of construction can be made. So therefore they will be making somewhere like on 2500 square feet, easily some 3 flats or 4 flats they can construct. You understood? They constructed 4 flats, they gave me 2 flats, they retained 2 flats. Now what is that I am transferring to them? Land? No, FSI. Unutilized FSI I am transferring. Means it is right to use land. Understood or not? Am I transferring land or right to use land? Right to use land I am transferring, for which they are giving me 2 flats. That is my consideration. Correct? Now in this case, is it supply or not a supply? It is supply. Why it is supply? I will tell you. I am not transferring the land, I am transferring the right to use land. So therefore it is not excluded from supply. Only sale of land is excluded from supply. So therefore this activity will be coming under supply. But whatever consideration I got, the 2 flats I got na, what could be the price of each flat? Maybe 1.5 crores, means 1.5 into 2, 3 crores I am getting as consideration. On that particular consideration, I will not pay GST, the promoter or builder only will pay GST under RCM. You understood up to this? Clear? Then let's see what is TDR now. So if you observe here, what happens is that one person is having a building and a metro line is going through that building. So the government official is coming and telling we need to demolish your building. If you see in Nungambakam many buildings got demolished. Have you observed? Have you been to Nungambakam? So wherein opposite ICI one petrol bunk was there. The entire petrol bunk they have demolished. In Rosie Towers that compound wall and all also gone. And even little bit if you go, so there is a Eldorado building that is opposite the Taj Hotel etc. There also many buildings they have demolished. Reason being because there is a metro station which is coming up over there. So therefore metro construction they will acquire the land. But the builder, that property owner will say, no, I will not give. In return, when he agreed, if he is getting a TDR, he agreed. So actually in capital gains you would have come across something called as compensation payable for compulsory acquisition. But that compensation will be either in the form of money or in the form of TDR. Is it clear? Sir, what is the TDR? TDR means like a virtual land. So what I can do with that virtual land? For example, I sacrifice my building which is 1500 square feet, for which I got a TDR of 1500 square feet. Now some other person will be constructing the building and he has a FSI restriction. How much he can construct? Say 2 is the FSI in Nungambakam. How much he can construct? If he is having 5000 square feet, how much he can construct? 10,000 square feet. So beyond the 10,000 square feet can he construct? No. But if he buy the TDR from me, he can construct beyond 10,000 square feet. Are you understanding this or not? In the same Nungambakam, if you observe, there is one crest and VGN properties. Have you seen that? That is, after you cross Taj Hotel, so on the left side you will see VGN properties, which is of a 10-floor building. And this side, one crest like that one building is there, which is also a 10-floor building. How, sir, 10 floors approval they are getting? Because the FSI limit is only 2. And which means if they have 10,000 square feet, hardly 20,000 only they can construct. But what they are doing is that they are acquiring the TDR. From whom they will acquire TDR? Many people would have sacrificed their building during the road widening, etc. and all. At that time they will get the TDR, which is like a virtual land, which they will be transferring it to the builder. Now say for example 1500 square feet I have. Using the 1500 square feet, how much the builder can construct? 3000. So I am transferring the 1500. So which means he can construct 3000 square feet worth of building. So will he pay me consideration or not? Definitely he will pay me consideration. If I get from the government, hardly I will receive the guideline value. But when I am transferring it to the builder, he will pay me market value. So that is my consideration. Are you understanding this? So what is the difference between FSI and TDR? FSI, when I transfer, the builder will construct the remaining portion in my same place. Whereas in case of TDR, I am losing my place. When I am transferring the TDR, he will construct in some other place. But in both the cases, he will give me consideration. On that consideration, I will not pay GST, but the builder will pay GST under RCM. Are you understanding this? Now, see what owner can do. Owner got the TDR. What owner can do? Owner can exceed the FSI of any area where he want to construct. So what is the cheat code for FSI? TDR. So if you want to exceed the FSI, you can purchase the TDR, okay? But it should be purchased at the time of approval itself. Not that you commence the construction and thereafter you will acquire the TDR. No. At the time of approval, before constructing itself, you should get approval na. At that stage itself, you should acquire the TDR. And proper approvals and all you need to get, then only they will allow you to construct more than some 5 floors, 6 floors, 7 floors, etc. and all. Okay, what he can do, he can also sell it to some other builder who wants more FSI, and thereby he will be getting the consideration. Hope you understood the concept of FSI and TDR. Then there is one more term called as long-term lease. What will happen in long-term lease? I am having a land which I don't want to sell, but at the same time I want to lease out. What is called as a long-term lease? Yesterday only I told you. What is called as a long-term lease? Lease for a period greater than or equals to 30 years is known as long-term lease. So I am giving my land on long-term lease to you, and you are giving me the lease rentals. On that lease rentals, so GST I will not pay, you will only be paying. You understood? So now these three, what are these three? TDR, FSI and long-term lease. I am transferring to a promoter or builder. You understood? Now see this image. So I am a landowner, I am transferring TDR, FSI, long-term lease to the promoter or builder, for which promoter or builder given me how much consideration? 10 lakhs as consideration he has given. Now on that 10 lakhs, who will pay GST? Landowner will pay GST or promoter or builder will pay GST? Promoter or builder will pay GST under RCM. However, there is an exemption. What is that exemption? Using this TDR FSI long-term lease, the promoter or builder is making construction. What is that he constructed? He constructed 40 commercial units and 60 residential units. Proportionate to residential units, the exemption will be given in order to reduce his cost on the inward supply, okay? Because for residential units, the cost should be less na. Commercial units people will afford, but residential units should be affordable. So for that reason, they need to reduce the cost. So what government is telling, on that inward supply of TDR FSI long-term lease, proportionate to residential units that do booked before completion certificate, not booked after completion certificate, booked before completion certificate. Now see the chart and tell me how many units got booked before completion certificate. Residential booked before completion certificate. Residential booked before completion certificate 25. Out of the total, what is the total? Out of the total, what is the total? 100 total project 100. Out of the total 100, how many are residential booked before completion certificate? 25. To that proportionate we will get the exemption. So what is the exemption? Come on, tell me. 25 by 100. So what is the value of inward supply? 10 lakhs. 10 lakhs pa, 10 lakhs, 10 lakhs. Correct? How much consideration is paid by the builder to the landowner? 10 lakhs. Take your calculator. 10 lakhs into 10 lakhs into what is the rate of GST on this TDR FSI long term lease? 18%. 10 lakhs into 18%. How much is the GST liability? 18 lakhs. 1,80,000. 1,80,000. Whether full 1,80,000 is payable or not payable? Not payable. Out of this 1,80,000, proportionate exemption will be available. What is it? Proportionate exemption to the proportionate of residential units booked before completion certificate divided by total number of units. What is that? 25 divided by 100. That is 45,000 will be exempted. So from 1,85,000, 45,000 is gone, means what is the remaining amount? That will be the GST liability. You understood the exemption. Now tell me the formula for exemption. Come on. Value of inward supply of TDR FSI long term lease into 18% into area of residential units booked before completion certificate divided by total area of the project. Is it clear? Why I said area? Because not necessary that all these units will be of the same size na. So some units will be of 1200 square feet, 3 BHK, some units will be 2 BHK, some units will be 4 BHK. That's why you take the area as the proportion. So see the formula. What you need to remember is that value of inward supply TDR FSI long term lease into 18% into floor area of residential units booked before completion certificate or first occupation, whichever is earlier, divided by total floor area of the project. You understood? These are the exemptions that we have for construction sector. Now we are moving on to advocate services. In advocate services, so first we need to understand who is an advocate, who is an arbitrator, and how they can practice. A person who is holding a law degree, either BL or LLB, and registered with the Bar Council can either practice as advocate or can practice as arbitrator. If they practice as advocate, they will settle the dispute through the court of law. Whereas if they practice as arbitrator, they will do out of the court settlement. You understood? Means they will not settle the case through the court completely, like a panchayat. So completely outside the court settlement, and people so will definitely listen to whatever they say. In village level, even today we can see arbitration that is happening. So then settle the dispute out of the court. Whenever there is an arbitrator, they cannot practice as firm or body corporate. They will usually practice only as individual. Whereas if they practice as advocate, they settle the dispute through the court of law. Either they can practice as individual or can practice as firm or can practice as body corporate. But remember, if they are practicing as body corporate, they cannot provide representation services, which means they cannot go to the court and appear on behalf of their client. You understood? Means they can only do the consulting services. They can give opinion, they can give advisory, etc. But they cannot go to the court. When they cannot go to the court, then why they will be called as advocate? You understood? Advocate main role is to go to the court and appear. That's the reason why usually advocates will never practice as body corporate. Even though they can practice, but literally practically they will not practice. So either they can practice as an individual or can practice as a firm. Senior advocate is a status which is given to them by the High Court or Supreme Court depending upon their legal standing. Like what type of cases that they are dealing with, what is the experience that they have. Based on that, they will be given the status as a senior advocate and normal advocate. Now kindly look into this chart in the next page. First chart, one chart is there. Now there are two charts. So we have exemption, first exemption related to individual advocate other than senior. Individual advocate other than senior means normal advocate and firm of advocates. For them, so quickly go through the chart and tell me what are the exemptions that they are having. Read. So first, individual advocate other than senior advocate and firm of advocate. If they are providing services to business entity, no, then it is exempted. If they are providing service to another individual advocate or firm of advocate, yes, then exempted. If they are providing service to central government, state government or union territory or local authority or GA refers to government authority. You just write down GA refers to government authority, not government agency, government authority. There is a difference between government authority and government agency. Government agency means the one to whom contractors or agents to whom the work is outsourced is known as government agency. But government authority means set up under an act of parliament or a company that is where government has invested more than 90%. So for what purpose is government authority is established? Mainly for the purpose of carrying out the functions of the constitution or other things. Yesterday we discussed the definitions. Check that and tell me please. So government authority means what they will be doing. Established for the purpose of promoting trade and commerce, are established for the purpose of carrying out functions under constitution. Carrying out functions under constitution. Suppose if it is established for the purpose of promoting trade or commerce or industry, what is it called as? Government entity. So here GA includes government authority as well as government entity. Both are covered. Both are covered here. Here for the exemption. For the exemption, GA includes government authority as well as government entity. Both means whether they are set up for the purpose of carrying out functions under constitution or for the purpose of promoting trade or commerce, both are covered here. Okay. Now, so then next one, whether its turnover during the previous year does not exceed threshold limit, then also it will be exempted. Come on, tell me what are the 4 exemptions with respect to a normal advocate and firm of advocates. 4 exemptions. Number 1, if they provide services to other than business entity. Other than business entity means individuals. If they provide services to individuals, it is exempted. Number 2, if they provide service to another individual advocate or firm of advocate, exempted. Number 3, if they provide services to government, central government, state government, local authority, government authority or government entity, then also it is exempted. 4th exemption, if they provide services to business entity whose turnover during previous year exceed threshold limiter, does not exceed threshold limiter, does not exceed threshold limit, then it will be exempted. You understood? So in remaining cases only it will be taxable. Is that clear? Now from this first chart to the second chart, you compare and tell me what are the exemptions that we have for arbitrator and senior advocate. For arbitrator and senior advocate, what are the exemptions that we have? Out of these 4, only 3 exemptions, correct? First point, if they are providing services to an individual, exempted. If they are providing services to government, that is government, central government, state government, local authority, government authority or government entity, exempted. Third point, if they are providing services to business entity whose turnover during the previous year exceed threshold limiter, does not exceed threshold limiter, does not exceed threshold limit. There 4 points, here 3 points. Which point is missing? If senior advocate is providing service to another advocate or firm of advocate, listen carefully. I am senior advocate, you are individual advocate or firm of advocate. When I provide service to you, you are not my recipient. You will in turn provide service to one client. That client is my recipient. You understood or not? Again I am repeating, I am a senior advocate, you are an individual advocate or firm of advocate. Now I will provide service to you, you are not my recipient. You in turn will have one person on whose behalf this case is taken up. That client of yours will be my recipient. Now, if that client is individual, the service is exempted. If that client is government, the service is exempted. If that client is business entity whose turnover during previous year does not exceed threshold limit, my service is exempted. Is it clear or not? So, whenever senior advocate is providing service to another individual advocate or firm of advocate, don't see the recipient as the individual advocate or firm of advocate. His recipient will be there now, subsequent recipient. That person only will be called as my recipient. Is it clear or not? Sir, what about arbitrator providing service to individual advocate or firm of advocate? Hypothetical, impossible, it will never happen, because it is like a homeopathy doctor going to allopathy doctor and getting an English medicine. Why he will do? So, you understood or not? So, homeopathy doctor means he first believe in his medicine. Like that, arbitrator first he believes in his way of doing. What is that? Out of the court. Advocate will be through the court. Why advocate will receive service from arbitrator, or arbitrator receive service from advocate? If at all they receive, that will be receiving in their personal capacity. Personal capacity means other than individual, other than business entity. Other than business entity means individual. Anyhow, it is exempted. You understood? Yeah, arbitrator will not provide services to advocate. Even if they provide, that is for their personal purpose. Personal purpose means it will be coming under other than business entity, therefore it will be coming under exemption. So that is what I have given. Whether senior advocate service to another advocate or firm of advocate is exempted. In such case, the litigant, applicant or petitioner shall be deemed to be recipient, and the activity shall be analyzed accordingly for taxability. If they are business entity whose aggregate turnover during previous year exceed threshold limit, then it will be taxable under RCM. You understood this? Now quickly go through these two charts. We will do an assignment to understand, like what is the application. Okay, come on. I'll give you 5 minutes time. Yes. Did you go through the two charts? Now have a look into the first one. There is an individual advocate other than senior advocate who is providing service to individual advocate who is a senior advocate whose aggregate turnover during the previous year does not exceed threshold limit. Taxable or exempted? Why? You should see first chart or second chart? First chart. And if they are providing service to another individual advocate or firm of advocate, whomsoever he may be, this will be exempted. Clear? Second one, individual advocate other than senior providing service to another individual advocate whose turnover during previous year exceed threshold limit for registration. Exempted. Read the chart properly. If they are providing service to another individual advocate or firm of advocate, always it is exempted. Don't see whether their turnover during the previous year exceed threshold limit, does not exceed threshold limit. That point you need to see in which case, only for business entities, not for another individual advocate or firm of advocate. Are you understanding this? So in both these cases, it will be exempted. Then next, firm of advocate provided service to A Limited. A Limited aggregate turnover during previous year 18 lakhs and aggregate turnover during the current year 22 lakhs. Applicable threshold limit is 20 lakhs. What is your answer? Why exempted? We should see previous year. Previous year it is 18 lakhs. It does not exceed 20 lakhs. Therefore, it will be coming under exempted. Okay. Then next one. So then next one, firm of advocates providing service to A Limited. Aggregate turnover during the previous year is 16 lakhs. Obtained voluntary registration. Applicable threshold limit is 20 lakhs. What is your answer? Why exempted? Aggregate turnover during the previous year does not exceed threshold limit, but they obtained voluntary registration. That is irrelevant. Salad, you understood? So that is irrelevant. Why it is irrelevant? See there, what we have exemption, business entity whose aggregate turnover during the previous year does not exceed threshold limit. Did they give that they should be unregistered like that? No. So therefore, even though they have obtained registration, it is irrelevant. So this service will be exempted. Partnership firm engaged in exempted supplies whose aggregate turnover is 80 lakhs during previous year, they are not registered during current year and previous year. Now, what is your answer? Are they providing service to a business entity? Yeah, RMN and company partnership firm, not business entity. Yeah, definitely business entity. Whose turnover during previous year exceed threshold limit, does not exceed threshold limit, exceed threshold limit. So what is your answer for this? Very good, taxable, but GST not payable. Why GST not payable? Because they are making only exempted supplies. They are not required to get registered. But sir, I said, as per section 24, a person who is liable to pay GST under RCM is compulsorily required to get registered. But there is another section which says that a person who is making exclusively exempted supplies is not required to get registered. So if I am making only exempted supplies, I am not required to register. For example, RMN and Co. I am making only exempted supplies. I am not required to register. But as per another section, as I am having some inward supply from advocate, I need to pay GST under RCM. Which will prevail? Actually, section 23 says a person is exempted from registration if they are making exempted supplies. Section 24 says a person is compulsorily required to get registered when they are having some inward supplies on which they need to pay GST under RCM. But section 23 overrides section 24. So if a person is exempted from registration, they are exempted from registration irrespective of the other section. Therefore, here RMN and company is exempted from registration, means they will always be exempted from registration irrespective of their aggregate turnover. So section 23 overrides section 24. So this information please make note somewhere in your notebook or in this itself, some space if you are having, you write, else you write in your notebook. So some 4 points will come, 4 points will come. So write down. Number 1. As per section 23, comma, person making exempted supplies, as per section 23, comma, person making exempted supplies, as per section 23, comma, person making exempted supplies is exempted from registration. Person making exempted supplies is exempted from registration. As per section 23, person making exempted supplies is exempted from registration. You written that na? Next. As per section 24, person having RCM liability, as per section 24, person having RCM liability, is compulsorily required to get registered. As per section 24, person having RCM liability is compulsorily required to get registered. Full stop. However, section 23 overrides. However, section 23 overrides section 24. However, section 23 overrides section 24. Compulsorily required to get registered. You have written na? However, full stop. However, section 23 overrides section 24 and they are not required to get registered. And not required to get registered. You understood this pa? This is a very, very important point. It can be tested in exam. Be careful. First, as per section 23, a person who is making exempted supplies is exempted from registration. But as per section 24, a person who is having RCM liability is compulsorily required to get registered. Now the conclusion, should they register or not? No need to register. Why no need to register? Because section 23 overrides section 24 and they are not required to get registered. Applying that point, this particular case, it is taxable. Ayya, don't write exempted. Just because they are not required to pay GST, the service will not become exempted. The service is taxable. The service is taxable, but they are not required to register, so they will not pay GST. If you write in this place exempted, na, you will not get 1 mark. And if I am a valuer, I will give 0 marks for your entire paper. Even if you have written something correct also, I will not give 1 mark also. It's okay. Even if my profession is gone also, it's okay. Because it is like you are changing the character of a person. Character assassination you are doing. You understood or not? That is, actually that service is taxable, but you are writing as exempted. It's criminal, 420 offense. You understood or not? You should not do that. Because the service is taxable, but they are not required to pay GST because they are not required to get registered. Don't write it as exempted. Are you understanding this? Then, next one. Senior advocate providing service to individual. What is your answer? First charter, second charter? Second chart. Senior advocate providing service to individual, taxable or exempted? Exempted. Senior advocate, let's complete, one second. Senior advocate providing service to government agency whose aggregate turnover previous year exceeds threshold limit for registration. Taxable or exempted? Taxable. Kumutta. Government. So government agency it is, not government authority. That's why I asked you to write government authority only exempted, not government agency. Not government agency. Government agency is like a business entity. That exemption is only for government authority. You have written there, GA means. GA means government authority or government entity. Sorry, pa. So government authority or government entity. GA means government, not agency. But here it is given government agency. Therefore, they should be treated like a business entity. Therefore, business entity whose aggregate turnover during previous year exceed threshold limit. So, what is your answer? Taxable. Next. Arbitrator providing service to A Limited whose aggregate turnover during previous year does not exceed threshold limit for registration. Exempted. Because arbitrator to a business entity whose turnover during previous year exceed threshold limit or does not exceed. Senior advocate providing service to firm of advocate. Be careful. Senior advocate is providing service to firm of advocate who in turn provides services to XYZ Limited. Now to senior advocate, who is the recipient? XYZ. And that XYZ turnover during previous year exceed threshold limit. So, taxable. Very good. Now senior advocate providing service to individual advocate who in turn provided service to an individual. Now who is the recipient? Individual. Senior advocate to individual, what is your answer? Already we discussed. Exempted. Therefore, it will become exempted. So, whenever senior advocate providing service to firm of advocates or individual advocate, you should not see them as the recipient. In turn, they provide service to some other person. That some other person is only the recipient. Understood your advocate and arbitrator services? Then, next one. Look into transportation of passenger service. So there are two charts you can see in the next 2 pages, transportation of passengers and transportation of goods. First we are looking into transportation of passengers. Even though we have this big chart, but your objective is only to remember what are exempted. Remaining cases and all it will be taxable. So first, airways, waterways, then roadways and railways, like that we divided. Yes, Pa, you had one doubt, clarified. Break you will ask. So GST implication on transportation of passengers, airways, railways, waterways and roadways. We are dividing that into 4. Now first in case of airways, what is exempted? See there, first point. If the starting point, embarking means starting point, or terminating, that is ending point, is in northeastern states or Bagdogra in West Bengal, that too in economy class, then that air ticket is exempted. For example, you want to go from Chennai to US and you are booking 2 tickets, Chennai to an airport in Bagdogra or northeastern state. That ticket is exempted. Why the ticket is exempted? Because the ending point is in that place. Again from that place you are booking another ticket to US. That ticket is also exempted because the starting point is in that place. Either ending point or starting point, if it is in northeastern states or Bagdogra in West Bengal, then it is exempted. But this exemption is available provided it is in a business class or economy class. Economy class, not for the business class. Sir, what are northeastern states? Remember MMTNA SAM. MMTN, Manipur, Mizoram, Tripura, Nagaland. It's there in the same page below. Manipur, Mizoram, Tripura, Nagaland, MMTN. A, Assam. Yes, Sikkim. A, Arunachal Pradesh. M, Meghalaya. These are the northeastern states. So once again, what are the northeastern states? MMTN, A, SAM. MMTN, M for Manipur, next Mizoram, next Tripura, next Nagaland, MMTN. Then A, Assam, yes, Sikkim, A, Arunachal Pradesh, M, Meghalaya. So these are the northeastern states plus one more place, that is Bagdogra in West Bengal. If the starting point or ending point, not unending point, or ending point is in that place, then it is exempted. Then look at the second exemption. Suppose if government is giving some money to the airlines for providing airline at a reasonable rates. Sometimes there is a scheme called as Regional Connectivity Scheme Airport, wherein the airlines will be traveling or operating in that airport at a nominal rate. There are many regional connectivity airports in India, like for example, Tiruchi airport is a regional connectivity airport, wherein so people who are using Tiruchi airport, so shorter distances and all, at a nominal rates the airlines will be doing. How airlines will do at a nominal rate? Because they will get a part of the money from the passenger and a part of the money they will get from the government, central government. Okay. Now you read that point and tell me what is exempted. Amount received from government, not from the passenger. Amount received from the government towards viability gap funding. So for example, 3,000 rupees is the ticket, they will collect 2,000 from the passenger, 1,000 rupees they will get from the government. So what is the viability gap? 1,000. That 1,000 rupees will be exempted with respect to regional connectivity airport scheme. For how many years this exemption will be given? Means the regional connectivity airport scheme is for 3 years? No. The regional connectivity airport scheme may be for 10 years, 15 years also. But the exemption is for 3 years. Means first 3 years, money received from passenger, taxable. Money received from government, exempted. After 3 years, money received from government as well as money received from passenger, both will be taxable. Okay. So what are the two exemptions for airlines? Passenger, come on. Embarking or disembarking at northeastern states or Bagdogra in West Bengal. Second point, amount received from government towards viability gap funding. How many years? 3 years. Next, these are the two exemptions. So all other cases it will be. Then railways, you see what is exempted. Other than first class or other than AC. Other than first class or other than AC, it will be exempted. And even metro, mono and tramway is also exempted. What is other than AC, other than first class? Second AC taxable? Yes. Second AC taxable, third AC taxable, chair car. AC means taxable. First class, let it be AC or non-AC taxable. What is first class non-AC? Local train. In the local train we will be able to see first class non-AC local trains. That is also taxable. So any first class taxable, AC coach will be taxable. So other than first class or AC, including metro, mono and tramway. Metro rail you know, monorail means what? Single track. There will be a single line, bullet trains. In Mumbai it is there. Then tramway, on the road itself they lay down the track. So that is called as tramway. So these three will be exempted, let it be AC etc. You don't have to bother. So what are exempted? For 2 points you need to remember for exemption. Railways, first point, other than first class or AC. Next, number 2, metro, mono, tramway. Okay. Next, waterways. In case of waterways, what is exempted? Carefully see there. Inland water is exempted fully. Inland water means what? Within the country there will be rivers. Through rivers, when the transportation happens, that is called as inland waters. Wherein in Kerala there is a water metro, like within the river there will be transportation of passengers. So then even in Andhra Pradesh there is one big river called as Godavari river, there also transportation will happen. Even in Karnataka there is a river called as Kaveri river, there also the transportation will happen. Tamil Nadu sir, no one is giving what to do. So no one is sending the water here, and this side Godavari river will not come, that side Kaveri river will not come. Kerala, that is on the other side. So from there it cannot travel upwards, it will go downwards only. So therefore we don't have any example for inland water when it comes to us. But we have coastal waters example. What is that? Kanyakumari. In Kanyakumari there will be transportation, like Vivekananda rock, Tiruvallur rock is there. So from the shore to the rock transportation happens. Is it sea or water? Like inland water or sea? See, that is called as coastal waters. Understood? Coastal waters between places in India, for public transportation it will be exempted. Example, for Andaman and Nicobar Island or Lakshadweep Islands, so we will be providing the passenger transportation ships in coastal waters, that will be exempted. All other cases it will be taxable. So tell me, in case of waterways, what are the exemptions? Only two exemptions. Number one, inland waters exempted. Number two, coastal waters between places in India, between places in India, okay. But for what purpose? Public transportation, means other than for tourism purposes. So every mode we saw two exemptions, correct? So once again, airways, what are the two exemptions? Starting point, ending point, northeastern states or Bagdogra. Second exemption, amount received from government, viability gap funding, 3 years. Then in case of railways, other than first class or AC, metro, mono, tramway. In case of waterways, inland waters, coastal waters between places in India for public transport. When it comes to roadways, we have three exemptions. Three exemptions we have for roadways. See the first exemption, metered cab or auto rickshaw is exempted. Metered cab means what? Car where the meter will be fixed without GPS. So they will be fixing based on the distance that is traveled, that is called as metered cab, like a auto meter. So cab also will have meter. So metered cabs or auto rickshaws, okay, exempted. Whether meter is there or not, it will be exempted. You understood? Next, stage carriage. Stage carriage means local bus. Within the city, local bus will be there, na, 29C, no, 13A, like that. So that bus. So local bus will be exempted, provided it is a non-AC. What if it is a AC bus? Taxable. Local bus, if it is AC, taxable. Non-AC will be exempted. So you need to remember exempted. What is the first exemption? Metered cab or auto rickshaw. Second exemption, non-AC stage carriage. Even share auto will also come under stage carriage. Stage carriage means a carriage which stops at every stage of its journey. Share auto will stop at every stage of its journey, correct or not? So that will be coming under stage carriage. Then contract carriage. Contract carriage means point to point travel. That is, it starts at one place, it stops at the other place. In between they will stop only somewhere in a forest. In the name of restaurant, highway, one restaurant only they will stop. That is called as contract carriage. Have you seen that? Whenever you travel from Chennai to any other place, town or city, so you will be booking one private travels. There are any number of travels, TAT, Orange travels, like that. Lot of travels are there. So when you book that particular private travels, starting point will be Chennai and ending point will be either Madurai or Trichy, etc. And between they will not board the passengers or the passengers will not get down. That is called as a contract carriage. But contract carriage AC is always taxable. So which is exempted? Non-AC other than tourism or hire. Other than tourism or hire means what? Purely public transportation. What is an example of non-AC contract carriage for tourism? So they will be operating a package tour, like for example, so this Tirumala trip. So morning, SETC bus is there. Morning they will pick, that is Tamil Nadu Tourist Development Corporation. So they will take the people morning and they will go to Tirumala after darshan. So return and afternoon lunch and all they will only be providing. So this will be called as package tour, but it is in non-AC contract carriage, taxable, okay. Then hire. Some people what they do, say for example, there is a very big family, around some 40-50 members are there in that family, they want to go for a marriage function, then they will book a bus, you understood or not? Bus they will book and in the bus they will be converting it into marriage bus and they will be taking the bride, bridegroom, etc. and all. Have you observed that? So that is also coming under contract carriage for hire and it will be taxable. So what is exempted? Non-AC contract carriage other than tourism or hire. So these three are the exemptions. Come again, what are the three exemptions for roadways? Metered cab or auto rickshaw. Number 2, non-AC stage carriage. Number 3, non-AC contract carriage other than tourism or hire. Then next, sir, if these three wherever we have seen exempted, remaining and all will be taxable, okay, remaining and all will be taxable. These three wherever we have seen exemption, if it is through e-commerce operator, it will become taxable. Generally auto exempted, Generally, auto is exempted. If that auto is through Ola or Uber, it will become taxable. You understood? Generally, non-AC contract carriage for public transport exempted. If you book it through Red Bus, then it will become taxable. Are you understanding this? So generally it is exempted, but if it is through e-commerce operator, it will become taxable. That is this. Now we are moving on to goods transportation service. So far what we have seen is passenger transportation. Now look into goods transportation. The same way we are dividing here also: airways, waterways, railways and roadways. But you should remember what is exempted. Again I am telling you. So because the major mistake that we do is that we focus on everything, because of which the core part we will be missing out. So you need to remember what is exempted. So remaining case and all will be taxable. Now again, in case of airways, tell me what is exempted. If the goods are transported from outside India to India, that freight will be exempted. Understood? Only one exemption. Then in case of waterways, what are the exemptions you can see? Inland water is exempted, same as passenger transportation. Then coastal waters also, one point is their exemption. See that, what is that? Specified goods. Sir, what are those specified goods? You can see that below, total 6 specified goods you are having. Agricultural produce, food grains including pulses, flours, milk and salt, organic manure, newspapers and magazines, defense and military equipment, relief material for natural or man-made disasters. So agricultural produce you can understand, food grains including flours, milk, salt, pulses, that also you can understand. Organic manure means instead of fertilizers and pesticides, we will be using manure, cow dung as fertilizers. In the place of fertilizers, chemical fertilizers, we use that. Newspapers and magazines, defense or military equipment, that is which are used by the military equipments and all also will be transported. Relief material for natural and man-made disasters, like recently in Wayanad there is a big disaster. For the disaster some relief materials we will be sending, so that will be coming under relief material for natural and man-made disaster. These are the specified goods. If these specified goods are transported by coastal waters, for difference between inland waters, coastal waters, you understood na? Inland water means river, coastal water means sea. Okay. So specified goods is exempted. So tell me, for airways what is exempted? Outside India to India, transportation exempted. Waterways what is exempted? Only 2. Inland waters, coastal waters, specified goods. For railways what is exempted? Same specified goods exempted. What are those specified goods? The same list. What is that list? Agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, relief materials, military and defense equipment. The same 6 is there even for railways also exempted. Remaining cases it will be taxable. Then go to last one, roadways. In case of roadways what is exempted? In case of roadways what is exempted? Other than GTA or courier agency, remaining and all will be exempted. Now what is a goods transport agency? Means any person engaged in transportation of goods by roadways and issues a consignment note by whatever name called. For example, they should be transporting goods belonging to multiple consignors to multiple consignees. That is only called as GTA. Whether porter will come under GTA? No. Why porter will not come under GTA? Because they will be transporting goods belonging to only one person from one place to another place, so they will not come under GTA. But big lorry services where they will transport goods belonging to some 10 people, 20 people from one location to another location, they will be called as goods transport agency. Is it clear? So goods transport agency or courier agency is taxable, all others will be exempted. Now answer this. If there is any person who is transporting goods by horse cart, transporting goods by bullock cart or transporting goods by horse cart, taxable or exempted? Exempted. Other than GTA or courier is exempted. So usually in towns and all, if you see, through bullock carts they will transport the goods. Have you observed? That will be exempted. Okay. And even horse cart transportation of goods exempted. If there is a single lorry in that lorry goods belonging to one person is transported, taxable or exempted? Exempted. Why exempted? Because they are not GTA. Why they are not GTA? Because they are transporting goods belonging to only one person. That's why they are not covered under taxability. It is exempted. Are you understanding this? Next, transportation of people by horse cart. What is your answer? Transportation of people. You should not see this chart. You should see the previous chart. Transportation of people by horse cart. Taxable. Very good. Why taxable in case of roadways? Horse will go in road only, na? It will not fly, na? We are not going through unicorn cart. You understood? We are going through horse cart. Horse cart means it will go on roadways. So roadways, what are exempted? Number 1, auto rickshaw or metered cab. Number 2, non-AC stage carriage. Number 3, non-AC contract carriage for public transport. Whether this horse cart will come under these 3? No. Therefore, it will be taxable. Then, sir, will they pay GST? They will not pay GST. Why they will not pay GST? Their turnover will not cross the threshold limit. If their turnover crosses threshold limit, today itself you quit CA, buy 4 horse cart, wherein 20 lakhs each, so 80 lakhs, amazing turnover we will be getting. You understood? But definitely not. So that's why they will not be required to register, because their turnover does not exceed threshold limit, but you should write it as taxable. Okay. Then this ropeway, taxable or exempted? Taxable. Transportation of passengers by ropeway is taxable. Why is it taxable? Because it's not covered anywhere in the exemption. So therefore it will be taxable. Are you understanding this? Now, look into next page. This is one CBIC circular. There is a owner of the vehicle who is providing services in a non-AC vehicle to the person requiring the vehicle for transportation. If that vehicle is operated in a predetermined route based on a predetermined schedule, then it will be called as contract carriage other than tourism or hire, and it will be exempted. Sir, what is this, sir? Usually some companies, what they will do, they will ask the bus operators to pick the employees at different places, drop them in the company, again evening pick them in the company and drop in the respective bus stops. Have you seen that? Morning, if you see, lot of companies like Cognizant, Accenture, Royal Enfield, then Caterpillar, okay, these companies and all, what they do, they will operate a bus. Morning, lot of employees will be standing in the bus stop, somewhere I am talking about 7 o'clock, 7:30 like that. So these employees will be picked up and they will be dropped. Whether this bus service is operated on a predetermined route on a predetermined schedule, yes or no? Route is determined, schedule is determined. So next, whatever money that is collected will be coming under exempted. Why it is exempted? Because it will come under contract carriage other than tourism or hire, and it will be exempted. Can you remember this point here? Sir? Hired only. But they are giving a relaxation. They are giving a relaxation to the companies. So what they are telling is that you bring it under other than tourism or hire, because the moment the employees are dropped in the office, that bus is not at the disposal of the company. That bus will go. So which means they can use that bus for any purpose. So when it is hire, completely that will be in your possession. Correct or not? When you take a car on rent, that car will be with you throughout the day, yes or no? Yes. Then only you call it as hire is what they are telling. In this case, it is operated on a predetermined route on a predetermined schedule. So don't treat it like hire. It is other than hire, like a public transport only. Therefore, it will be exempted. This is what CBIC circular is telling. When they are telling exempted, why are you telling no, I will pay tax? Pay. Who is having problem? Pay. No problem at all. Okay. They are telling it as exempted. Good only, na? Actually, it should be taxable. But they themselves are telling no need to pay. Good only. You should remember that. Got it? Next. Vehicles. Yes, pa. Same service provided by Apollo. What? Ambulance, huh? That's what ambulance, a normal vehicle. Normal vehicle means then also it will be coming into this category. But actually what Apollo will do is that those buses and all will be at their disposal only, because they will be operating nurses and doctors on a multiple shifts. So throughout the day, the bus will be under their control. That's what next point you see. Vehicle at the disposal of the recipient means what? Morning to night, the vehicle will be with you only, or throughout the month, the vehicle will be with you only. If it is for a period of time could be 10 days, or period of time could be 1 month or 2 months, like that, then it will be called as renting of motor vehicle. And renting of motor vehicle always taxable, correct? Unless it is 4 points. More than 12 passengers given on hire to a state road transport undertaking, electric vehicle more than 12 passengers given on rent to a local authority, or if it is a motor vehicle for transportation of goods given to a GTA, or if it is a bus given on rent to a person who in turn provides transportation service to educational institution up to 12th standard. 4 points, correct? Only in those 4 places renting is exempted, but in this case it will be taxable. We don't have any exemption there. Suppose if the vehicle is at the disposal of recipient for a particular voyage or journey. What is particular voyage or journey means? Tour. Employees are taken on tour. Ooty tour, Kodaikanal tour, or Goa tour. Goa tour nice only, but they will not take. So that will be coming under contract carriage for hire or tourism, and it will be taxable. Is it clear here? 3 points you need to remember. If you are not getting this question in the next exam, coming attempt, call me and tell I will quit the teaching here. Okay? Challenge here. This question if you are not getting on this concept, this particular circular, I will quit teaching also. That much confident I am. Okay? Definitely it will come. So what are the 3 points? Remember, mark it as important here. This much confidently when I am telling, you are looking at me. It will come here, it will come. Okay, trust me, it will come. So what are the 3 points? Number 1. Hey, you will never another skating. Predetermined route on a predetermined schedule. What is the answer? Exempted. Okay. Then, if it is at the disposal of the recipient for a particular voyage or trip, taxable. Suppose if it is at the disposal of the recipient throughout the period, for a period of time, then it will be called as renting of motor vehicle, then also it will be taxable. You understood? So I asked you to remember what is exempted. What is exempted? If it is operated on a predetermined route on a predetermined schedule, AC or non-AC? Non-AC. Then it will be exempted. Next. In case of GTA, look into the next one. In case of GTA, we have 3 exemptions. Specified goods transported by GTA is exempted. So this specified goods point come in 3 places. What are the 3 places where transportation of specified goods is exempted? Number 1. Waterways. Which waterways? Coastal waters. Number 2, railways. Number 3, GTA. In all these 3 places, specified goods is same. Then, if the recipient is individual or HUF or AJP not having a factory and they are unregistered. So, if the recipient is individual, for example, you are coming to Chennai for pursuing your CA intermediate and you are not from Chennai. When you come to Chennai, so you will stay in a hostel, and at the time when you are coming, just one bag and clothes you will bring, but by the time you complete writing the exam, one bookshop you will be having, correct or not? Lot of books. Now what you will do after exam, you will leave to your place. Now you will carry all those books with you. Definitely you cannot carry, because in train, bus and all, luggage will not be allowed. Okay, so this you cannot carry also. Okay, can we throw it? Definitely not, because till result we cannot take that chance. So due to that reason, we will be packing it and sending it in a goods transport agency to our place, so that your father will go and collect it there. Now this will be coming under GTA service to a unregistered individual, and it will be exempted. Is it clear? So if the recipient is unregistered individual, HUF or AJP, and they are not having factory, then it will be exempted. Then if the recipient is central government, state government, local authority or government authority, registered only to deduct TDS. So just remember, recipient is government liable to deduct TDS, then it will be exempted. Is it clear? What are the 3 exemptions for GTA? Come on. Specified goods, if the recipient is individual, HUF, AJP, not having a factory and they are unregistered. Then third point, recipient registered only to deduct TDS. Recipient registered only to deduct TDS. Then next one, we have exemptions under IGST Act and miscellaneous exemptions. With that, exemptions chapter is over. Carefully listen. First one, both supplier of service and recipient of service located outside India. Any GST is applicable? No. Pa, supplier outside India. Pa. For example, you are going to US and watching a movie in US. Where is the supplier located? Where is the recipient located? Can Indian government come and ask GST there? Correct? Because how Indian government can collect GST when both supplier and recipient are outside India? Not possible. So therefore there is no GST. Is it clear? Second point. Service provided by a tour operator. Where is this tour operator? Indian tour operator or foreign tour operator? Indian tour operator. Indian tour operator. To a foreign tourist. Indian tour operator is providing services to a foreign tourist. In relation to tour conducted in India or conducted outside India? Conducted outside India, then it will be exempted. Now you will get a doubt. Sir, why Indian tour operator will provide tours to a foreign tourist in relation to tour outside India? It's like the foreigner is from US. They want to visit Sri Lanka and they are asking a person, Indian tour operator, to provide the tour operator service in Sri Lanka. Reason being, Indian tour operators will know nook and corner in Asia, because they would have known all the languages in Asia, mainly in Sri Lanka. So with Tamil we can manage na. So due to that reason, there is a tour operator in Tamil Nadu. So therefore foreigner prefers a Tamil Nadu tour operator. But where the tour is happening? In Sri Lanka. Now whatever money that this Indian tour operator is getting is exempted. You understood? Again tell me what is the point here? Indian tour operator providing tour operator service to a foreign tourist. Where the tour is conducted? Outside India, fully outside India. What if the tour is conducted in India? Taxable. What if the tour is partly in India, partly outside India? Proportionately it is exempted. To what proportion, sir, it is exempted? To the proportion of number of days the tour is held outside India divided by total number of days. For example, if the tour is conducted for 10 days, 6 days the tour is outside India, 4 days the tour in India, then to what extent it is exempted? 6 by 10. 6 by 10 it is exempted. But they have given one more point. But the maximum exemption is 50% of the total consideration. So tell me the provision. A. Total consideration into number of days the tour is conducted outside India divided by total number of days, or total consideration into 50%, whichever is lower. See there. Exemption is with respect to that part conducted outside India, computed as follows. Total consideration into number of days tour outside India divided by total number of days, or total consideration into 50%, whichever is lower. Now here, what if the tour is conducted for 5 days 18 hours outside India? 5 days 18 hours outside India, then we need to take it as 6 days. What if it is conducted for 5 days 6 hours? 5.5. Okay, what you thought? More than 12 or 12 means full day. Less than 12 means ignore. Don't ignore, take it as half day. Okay, see there. So greater than or equals to 12 hours considered as full day. Correct. There your logic is correct. But less than 12 hours considered as half day. Don't ignore it, consider as half day. Okay. Next. You understood second point and third point difference pa? Second point is fully outside India. Third point is partly India, partly outside India. Fourth point, you see, service provided by an intermediary when location of both supplier and recipient of goods is outside the taxable territory. Huh? Intermediary in India. Where is the seller of goods? Where is the buyer of goods? Where are you as a agent located? Means you are a intermediary, like a commission agent or broker. You are connecting a seller outside India to a buyer outside India. You get a commission, na? That commission is exempted. Is it clear? Seller of goods outside India, boss. Buyer of goods outside India. You are connecting them. For connecting them, you will get a commission. That commission is exempted. Are you understanding this? These are the 4 exemptions that we have with respect to IGST Act. Then miscellaneous exempted services, you see. Service by way of transfer of a going concern as a whole or independent part thereof. That is, I have some business that I am selling it to you full. Now whatever consideration I get, this will be merger, amalgamation or any name you can call. Now I get some purchase consideration. Na? In income tax, this is only called as slump sale. In capital gains, you would have come across this slump sale. Slump sale means what? Sale of business as it is. Now some sale consideration is received. Actually on that anyhow we are paying capital gain tax. That's why they are telling GST you don't have to pay, it is exempted. Are you getting this? Second point. Supply of service associated with transit cargo to Nepal and Bhutan. Nepal and Bhutan, if you see, they are landlocked countries. Any goods cannot be imported into Nepal and Bhutan through waterways. So first the goods are imported in India through waterways and it is unloaded in India. Then we have a MOU with Nepal and Bhutan. The goods will go through the roadways to Nepal and Bhutan. For this road transportation, if you provide any service, loading, unloading, transportation, insurance like that, that will be exempted. Okay. What is the point that you need to remember? Services in relation to transit cargo to Nepal and Bhutan. Sir, even when it is going to Nepal and Bhutan, the vehicle will return empty. For that vehicle also, return also, we will collect some money. Usually auto people and all, evening times or night times, when you ask them, so they will say 150 rupees in the place of 100 rupees or 75 rupees. Why? Because they will say return we have to come empty, for that also they will collect, correct? Like that, the lorry transporter, they will go to Nepal and Bhutan, they will carry the goods, but the vehicle has to come return empty, means petrol cost will be there, for that also they will collect some money. So that is also exempted. Both to and from covered in exemption as per CBSE circular if the cargo returns empty. Then third point, service by way of collecting or providing news by independent journalist. So just remember, independent journalists, they will not be working for any newspaper, they are independent. Even Press Trust of India, United News of India, PTI and UNI. What this PTI and UNI will do, they will collect the news and disseminate the news to all the newspapers. For example, here what happens, this Calcutta rape case is something which has become like a popular news from quite a long time. So daily they want to put the update in the newspaper. For that reason, they cannot appoint one reporter. Every newspaper cannot appoint one reporter there. So therefore, they will ask PTI. PTI is like an aggregator. So PTI will collect the news and give it to all the newspapers, and every newspaper will put the column related to that, and in the source they will mention as PTI or UNI. Next time when you read the English paper, you see that source, they will mention clearly PTI like that. Okay. So PTI is like an aggregator. They collect the news and they distribute the news to all the news channels and newspapers, for which they will get some money, that is exempted. You understood? Independent journalist is exempted. Then PTI and UNI is also exempted. Then service of public libraries by way of lending books, publication or any other knowledge enhancing content or material. Basically public libraries, whatever money that they are collecting for lending books, that will be exempted. Now, what if it is a private library? Taxable. Now ICI is having a library. Have you been to that? Study hall is there and library is also there. And whether that library is a public library or a private library? Private library. So can any person who is going on the road also can come, sit in the library, read the book and go? Because nowadays lot of people will go to the libraries to read each other. Okay. So then can we use ICI library for that purpose? No, it is not allowed, and it's a private library. Now suppose you are a CA student, you go to the ICI library and borrow the book and pay some charges for that. Is it taxable or exempted? Exempted under services provided by educational institution to its students, faculty and staff. So whenever you see the exemption, don't see that particular place alone. See the other parts also. Maybe other exemption also could be applicable there. Okay. Then there is a library called as British Council Library, like that one library is there in Chennai, which is actually a rich library wherein membership fees itself will be somewhere like 50,000 rupees per annum. Membership fees. In order to go to that library, you have to pay 50,000 per annum as the membership fees. And whenever, like lot of books is available, like all costly books and all are available there. When you borrow the book and pay the lending fees, whether that lending fees will be taxable or exempted? Taxable. Why it is taxable? Because it's a private library. Moreover, they will not come under educational institution. Then next, services by an organizer to any person in relation to business exhibition held outside India. So where is the organizer located? India. Where is the recipient located? India. India. But where they are conducting the exhibition? Outside India. So example, I am planning for a auto expo outside India in Dubai. I am an organizer. I am conducting a auto expo, means exhibition for display of all the latest cars in Dubai. Now I approached Mahindra company for showing their newly launched Thar 5-door rocks somewhere in the auto expo there, for which they paid me some money. So this will be called as services by an organizer to a person in India in relation to tour conducted outside India, exempted. What if the tour is conducted in India? Taxable. That is, what if the business exhibition, what if the auto expo is conducted in India? Then it will be taxable. The auto expo should be held outside India. The exhibition should be held outside India. Then service by way of public conveniences. Public conveniences means what? Washrooms, washroom, public toilet, washroom, lavatory, washroom, urinal, etc. We need to pay 2 rupees, 5 rupees, etc. That is exempted. No need to pay GST on that. Okay. Even then it will not cross threshold limit and all. So where people are paying and using. So people, we have a lot of open area and all na. Wherever emergency they get, immediately they will do there itself. Where they are thinking and all, because between animals and human beings there is no difference at all now, and therefore these people will not cross 20 lakhs and all here. Service by way of access to road or bridge on payment of toll charges. But toll charges we pay now usually in highways. When we are using the vehicle, we pay the toll charges. That toll charges is exempted. There is no GST on toll charges. Paying toll charges itself is too much. On the top of that, GST also if levied, no one will pay. So it is exempted. Sometimes because of not having the fast tag sticker, we need to pay extra charges. Even that is also exempted. Yes. Sometimes heavy vehicles will pay overloading charges. Even that is also exempted. All these are part and parcel of toll charges. See this. Overloading charges at toll plazas is also exempted. Higher toll charges for not having a functional FASTag is also exempted. But toll charges paid by way of annuity is taxable. Underline other than by way of annuity. What is this other than by way of annuity means? That is, generally these buses and all will not pay toll charges every time when they use the bus. SCTC bus or state government buses and all, every time they go in the highway, they will not pay toll charges because yearly some amount will be paid. That is called as annuity. That will be exempted or taxable? Taxable. Generally toll charges is exempted, but the toll charges paid by way of annuity will be taxable. Then look into 8th point, service by a performance artist in folk or classical art form of music, dance or theatre. Who is a performance artist? The one who performs before the audience in the stage, and either in folk or classical. And it should be in which art form? Either music, dance or theatre. Suppose if there is a performance artist who is performing in western dance and collected some money, taxable or exempted? Why taxable? Because it is not folk or classical. And how much should be the consideration? Per performance it should not exceed 1,50,000. What if they are acting as a brand ambassador? So even though it does not exceed 1,50,000, it will be taxable. Okay. For example, this is actually the place where we are, is a place where lot of dance, music and other dramas and all will be happening. And this is purely for the recreation purpose. There is no brand element involved here. So people will book the hall, they will perform, audience will be sitting and watching, and sometimes they will collect the ticket charges, sometimes there won't be any ticket, freely it will be given, and the person who is performing here may be receiving some remuneration. But in case if the same event is organized by a brand name owner to promote the brand if they are doing it, then in that case whatever money that is received by the performance artist, even though it does not exceed 1,50,000, it will become taxable. You understood? Sir, is it per performance for all the performance together? Per performance. Then ninth point, you see, service by way of training or coaching in recreational activities relating to arts, culture or sports. So there are some academies which are providing training in arts. Training in arts means either singing, dancing or martial arts or any art. Okay. So that should be by an individual, then only it will be exempted. For example, so actress Shobana is conducting a Bharatanatyam dance school and she is earning some money in the form of school fees. Whether the fees collected is taxable or exempted? Exempted. Why it is exempted? Arts by an individual. Suppose if that is in the name of a firm, so like Kalakshetra Private Limited, like that one company or a firm, in that name if they are running the dance school, then taxable. Then culture means imparting Vedas, Upanishads, languages, etc. by an individual, only exempted. Then sports academies by a charitable trust is only exempted. For example, MRF Cricket Academy, which is not a charitable trust, they collect 4 lakh rupees per annum for the purpose of providing training in cricket. Whether it will be taxable or exempted? Taxable. Suppose if there is a charitable trust which is providing training in cricket and collect some money, taxable or exempted? Exempted. So training or coaching in recreational activities, arts or culture should be by an individual, then only it is exempted. Sports should be by a charitable trust, then only it is exempted. Then 10th point, satellite launch services supplied by any person. So for example, Elon Musk is having SpaceX like that one entity. You know that? Now he is bringing that, for example, he is bringing that to India and they provide satellite launch services. Usually satellite launch service in India is provided by ISRO, Antrix Corporation, New Space India Limited. These are the 3 entities. But that does not mean any other person should not do this business. They can. Now Elon Musk is bringing his company to India, SpaceX, and provides satellite launch service. Taxable or exempted? Exempted. They did not tell particular person, any person providing satellite launch service will be exempted. Now look into some circulars related to exemptions. With that, this chapter is over. See that first one, generally in Big Boss or some other reality events, they will be bringing in these actors as the celebrity host, correct? Many channels are there wherein they will be bringing popular actors as the celebrity host in order to host the show. For example, this Kaun Banega Crorepati, they started this trend with Amitabh Bachchan, and at regional level, they are roping in many actors. So like in Tamil, they have roped in Surya, and in Telugu, they have roped in Chiranjeevi, like that. Even for Big Boss, in Tamil it is Kamal Haasan, and in Kannada it is Sudeep, like that. In Kerala it is Mohanlal, like popular actors, they will be roping in to host the show. Now they receive the honorarium or remuneration. Taxable or exempted? Anywhere we studied exemption? So, taxable. But they are telling, if their turnover exceed threshold limit, then it will be taxable. Why will it not exceed threshold limit, pa? Definitely it will exceed here. Crores and crores they are making. Service provided by guest anchors invited by TV channels for participating in their shows in lieu of honorarium attracts GST liability. However, guest anchors whose aggregate turnover does not exceed 20 lakhs shall not be liable to take registration and pay GST. That is irrelevant. Then this toll charges point already we have seen. That is not having a FASTag, they will collect some extra charges. Already we discussed this. Then even this annuity point we discussed. That is toll charges payable by way of annuities will be taxable now. Then looking to the last point, taxability of liquidated damages. That is, there are three situations which is given here. Please concentrate. I will give break 2 minutes. Wait. Okay. Number one, liquidated damages which is in the form of a mere compensation. It is like, I entered into contract with you, and in the contract clearly I am mentioning, if you breach, you have to pay me this much damages to me. Then is it arising out of contract or not arising out of contract? Arising out of contract, the name of this damages is known as liquidated damages. Clear, pa? Then next, actually outside your house gate, I parked my car. When I parked my car, you could not take your car, because of which you could not go to office, and for which you got a loss of pay. You got it? Now you will ask me to pay the compensation through court. This is liquidated damages or unliquidated damages? Unliquidated damages, not arising out of contract but arising out of court. Puridappa. Any compensation which is arising out of court, not out of contract, is known as unliquidated damages. That is not treated as consideration and it will not be taxable. You got it? So mere compensation to compensate the loss or damage or injury. So what is the name of this damages? Liquidated or unliquidated? Unliquidated damages. Unliquidated damages. Basically this will be by order of court. Correct? This is by order of court. Then it will be not treated as consideration, not taxable. You just write down there, example, car parked outside gate of other person. Got it? Next, suppose if it is specified in the contract, but the intention is not to regularize it, but to discourage a person from doing it. Example, check dishonor charges. Whether the bank will mention this check dishonor charges at the time of opening the account or not. When you open account, you will sign everywhere. Here you sign sir, here you sign sir means you will sign Actually, you accepted to all the terms and conditions. In that if you read, you will know that check dishonor charges you have to pay this much, like that they will mention. Means is it arising out of contract or not arising out of contract? Arising out of contract, but the intention is not to regularize. Not that you every time you dishonor the check so that you pay this charges, not that. The intention is to discourage such activity. Then also it is not treated as consideration and not taxable. Example, check dishonor charges check dishonor charges, comma, traffic fine. Traffic fine also to regularize or to discourage? Discourage, pa. It's not that, okay, as you wish you drive, you pay money. That is not the intention. So, it is to discourage. But is it arising out of contract between the parties? Yes. The moment when you apply for driving license, you accept for all the terms and conditions of Motor Vehicle Act 1988. So, in that itself, traffic fine you are accepting. So, it is arising out of contract. Suppose, if it is not to discourage a person, but to regularize, in the ordinary course of business, they will understand that it happens. Then, it will be treated as consideration, and the taxability depends upon principal supply. Example, late fee for delay in paying electricity bill. Whether the late fee is specified? Late fee is specified by the electricity board or not? If you pay late, you have to pay this much money, like that in the bill itself they will mention, correct? Is it specified? Yes. But this is not to discourage a person from paying late. They can understand that every person will not have money to pay. So therefore, it is to regularize. It's okay, but you have to pay this late fee, like that. Then, but why it is not taxable? It is exempted. Write down, it is exempted. Why it is exempted? Why it is exempted? Because electricity is exempted. Because electricity is exempted, the late fee for late payment of electricity charges is also exempted. Read the wording what they are telling. Treated as consideration, and taxability depends upon the principal supply. Okay. So, it is exempted as electricity is exempted. Next. Generally, in case of train ticket, there is something called as cancellation charges. Whether that cancellation charges agreed between the parties or not? Yes. Is it to discourage a person from doing cancellation or to allow, regularize? Regularize. Because they know that that seat they can give it to some other person also. Now, in this case, this cancellation charges will be taxable or exempted, depends upon the ticket. If the ticket is taxable, the cancellation charges for ticket also taxable. If the ticket is exempted, the cancellation charges for ticket also exempted. Example, AC ticket taxable, so cancellation charges for AC ticket is also taxable. And general class ticket, that is sleeper class other than AC, sleeper class ticket is exempted. So therefore, cancellation charges for sleeper class ticket is also exempted. Understood? So that's it. We completed exemptions, all the points we have seen. We'll take a break for 15 minutes. We'll meet at 11:20 and we will continue with liability to pay GST. Okay, we'll start. Have a look into segment 3, page number 37, liability to pay GST. Basically, in this liability to pay GST, section 9. So you have dedicated one page for writing these section numbers, na? There you go and please update. Section 9, liability to pay GST. Section 9, liability to pay GST. Already you have written section 7, that is supply. Section 8, composite supply, mixed supply. Section 9, liability to pay GST. Now we discussed one part, that is exemptions. That is actually section 11. Section 11 deals with exemptions. Section 11. Section 11, exemptions. Okay. Now come back here. Section 9, subsection 1 and subsection 2 is talking about the general rule, which says that generally who will have liability to pay GST to government? It is on the supplier. But there are 3 exceptions to this general rule. 9.3, 9.4 and 9.5. In case of 9.3, 9 subsection 3, there are some list of goods and services where the liability to pay GST to government is on the recipient. And 9.4, there is a promoter or builder who is getting inward supply from an unregistered person. So then they need to pay GST under RCM. 9.5 talks about supply of services, notified service through e-commerce operator liability to pay GST is on e-commerce operator. Again I am repeating, please concentrate and listen. So we have general rule which says that liability to pay GST is on the supplier. To whom? To government. So generally it will be FCM. But there are 3 exceptions. In those 3 exceptional cases, supplier will not pay GST to government. Some other person will pay GST to government. Who is that some other person? In case of 9(3), notified goods and services, liability to pay GST to government is on the recipient. 9(4), there is a promoter or builder who is having inward supply from an unregistered person. For example, I am a promoter or builder. I will buy cement, bricks, etc. and all from an unregistered person. Then I need to pay GST under RCM. Then 9 subsection 5, supply of notified services through e-commerce operator, the liability to pay GST is on e-commerce operator. Now have a look into 9 subsection 3, say this, general rule, supplier shall pay GST to government, exceptions 9(3), 9(4) and 9(5). 9(3), there are some notified goods and services on which liability to pay GST is on recipient. 9(4), whether supplier is registered, yes, then 9(4) will not come. When 9(4) will come, if the supplier is unregistered and the recipient is registered and notified, then 9(4) will come under RCM. 9(5), supply of services through e-commerce operator. I gave a comparative difference in a table. Please look into the table. In 9(3), what is notified? Goods and services are notified. So, but that goods notified for 2017 is not applicable for exam. This list of goods not for exam. Not for exam. Only we have list of services which is covered under RCM. What is the notification number that you need to remember for that? Notification number 13 of 2017. And how the supplier should be? Supplier can be either registered or unregistered, but the recipient should be registered, compulsory registration. And who will pay GST to government? Recipient will pay GST to government. You understood 9(3) pa? Again I am repeating, in 9(3), what is notified? Goods and services. But the list of goods, we don't have to learn. List of services, we should learn. What is that list of services given? Where is it given, that list of services? Notification 13 of 2017. How the supplier should be? Either registered or unregistered. How the recipient should be? Registered, compulsory registration. Who will pay GST in case of 9 subsection 3? Recipient will pay GST to government. Next, 9(4). What is notified? Inward supplies of a promoter or builder. Inward supply means what? Purchases. What are the purchase of a promoter or builder? Brick, cement, building material, pipes and fittings, etc. From whom they are purchasing? Means the supplier should be, recipient should be, then who will pay GST on that? Recipient will pay. Then 9(5). What is notified for 9(5)? Services. What are the services? 4 services pa. Remember this, HATE. H for housekeeping services. A for accommodation services. T for transportation of passengers. E for eating food from the restaurant. You can see that list of services through e-commerce operator, which is in page number 45. Page number 45. There are 4 services notified under 9 subsection 5, where the liability to pay GST is on e-commerce operator. And what are those 4 notified service? H for housekeeping service. Example for housekeeping service, Urban Company or Urban Clap. Who is the supplier in case of Urban Clap? The plumber or the carpenter or the AC mechanic, etc. will be the supplier. Urban Clap is the e-commerce operator, and the customer who receives the service is the recipient. Who will pay GST? Neither supplier nor recipient, but the e-commerce operator will pay. You understood the first one? Then number 2, accommodation service. Example, OYO. Who is the supplier for OYO? Hotel. And OYO is e-commerce operator. Who is the recipient? Your friend who regularly visits there. So, therefore, in this case, who will pay GST? Neither the hotel nor your friend, but the e-commerce operator OYO will pay GST. Is it clear? Then next, that is A. T for transportation of passengers. In case of transportation of passengers, example, Ola, Uber, Rapido, etc. Who is the supplier? Driver. Who is the recipient? Passenger. Who is the e-commerce operator? Ola, Uber, etc. Who will pay GST? Neither driver nor the passenger, but the e-commerce operator will pay GST. Are you understanding this here? Then last, eating food from the restaurant. In eating food from the restaurant, who is the supplier? Restaurant. And who is the recipient? Customer. Who is the e-commerce operator? Swiggy, Zomato, etc. Who will pay GST? Neither restaurant nor the customer, but Swiggy, Zomato will pay GST. This is called as notified services under 9(5). Who will pay GST? E-commerce operator will pay GST. Is it clear here? So can you tell me once again what are the 4 notified services? HATE, housekeeping services, accommodation services, transportation of passengers, eating food from the restaurant. Now they have given some conditions. See that conditions there. In case of housekeeping services, how the supplier should be? Registered or unregistered? Unregistered. What if the supplier is registered? It is not coming in 9(5). When it is not coming in 9(5), who will pay GST? Supplier only will pay GST. So what is the first condition for H point? What is the condition? Supplier should be unregistered. If the supplier is registered, it will not come under 9(5). So supplier shall pay GST. Are you understanding this? Then second point, A, accommodation services, same condition. That's why I just made it like HATE. First 2 common condition. What is that? Supplier should be unregistered. If the supplier is registered, it will not come under 9(5). Liability to pay GST to government is on the supplier. Whereas T and E, for the next 2 cases, let the supplier be registered or unregistered, e-commerce operator only will pay GST. Example, there is one roadside shop which is selling lot of fast food items. Now this roadside shop also listed with e-commerce operator. Correct? Almost everyone is listed through Swiggy. Let it be roadside shop or a premium restaurant, everyone is listed actually. Now there is a roadside shop which is actually not registered. Why not registered? Because they are not crossing 20 lakhs threshold limit, not registered. But they are also listing through e-commerce operator. Because one day my son asked me like what is Kalan? Okay. No, there is a fast food, Kalan. So what is Kalan, like that he asked? Because he said like his friends have told him that I had Kalan, super taste it was, like that. And he asked me, I want to eat. Randomly I searched in Zomato whether it is available. It is available here. And somewhere in a roadside shop, usually that is available. Premium restaurants and all, Kalan will not be there. So it is only in that shop. And they are listed through Swiggy, Zomato, and they are able to sell it. On that, GST is applicable or not applicable? Applicable, because liability to pay GST is on e-commerce operator. So GST is applicable. Now you understood the criminal intention of Chechi. You understood. So Nirmala Sitharaman, do not want people to enjoy the food happily. So if they order food through Swiggy or Zomato, even if the restaurant is not registered, but on that food there will be GST. Are you understanding this? That is this. Same way. But driver is not registered. Definitely driver will not be registered. Sir, if he is earning 20 lakhs and all, so it would have been great. He will not earn, so he will not be registered. But when he provides services through Ola or Uber, GST will be applicable. Who will pay GST? E-commerce operator. Now let's take a restaurant. For example, Hotel Buhari or some other Sangeeta or Bhavyam, like that, these restaurants are there, which are listed through e-commerce operators and they supply the food. They are registered. Even then, on those supplies through e-commerce operators, Swiggy, Zomato, who will pay GST? That Swiggy and Zomato e-commerce operator only will pay GST. So first two cases supplier should be, next two cases supplier can be registered or unregistered. Who will pay GST? E-commerce operator only will pay GST. Is it clear? Now, for H and A, what is the exception? That is, ECO will not pay. Supplier is super. Like that, for T and E also there is an exception. For T point, you see what is the exception. There is a company which is providing transportation of passengers through omnibus. What is a omnibus? Capacity greater than 6 passengers is called as a omnibus. Example, except driver seat pa. Someone asked, except driver seat, okay. So 6 passengers. Usually this, if you take Fortuner, Innova, etc. and all, will it come under omnibus category? First 2 seats pa. Middle will be 3 seats. Back will be 3 seats. So 8. Except driver 7. More than 6 ah. So therefore it will come under omnibus. That's where in the middle row they will remove it and they make it 2 bucket seats. 2 seats. Middle row 2 seats. Back row 3 seats. Now will it come under omnibus? No. Exactly 6. First row 2 pa, middle row 2, back row 3, that is how much? 7. Take out driver seat. 6. Exactly 6. Will it come under omnibus? No. It should be greater than 6, then only it will be coming under omnibus, not greater than or equals to 6 passengers. Is it clear? Greater than 6. And no doubt tempo traveler, minibus, everything else will come under omnibus because they are having a capacity more than 6. Now, who is the supplier? Who is the supplier? Company which is providing transportation of passengers through omnibus, through e-commerce operator. Liability to pay GST is on company only, not on e-commerce operator, because you can book Ola or Uber for bigger cars also. Yes, many times I booked Ola, Uber for 8-seater cars. I have booked. So in that case of 8-seater, that's what? First 2, next 3, next 3. These 8-seater cars, except driver, it is more than 6. No doubt it will be an omnibus. In that case, the travel operator only will pay GST. Ola, Uber will not pay GST. Is it clear? Provided the travel operator is company. Okay. What if the travel operator is a partnership firm or a sole proprietor providing transportation of omnibus through e-commerce operator? Who will pay? E-commerce operator. Ayya, can you remember this? Very, very important point. Definitely it will be tested in exam. If the transportation is through omnibus by a company, then liability to pay GST is on company, supplier only. This is an exception to T point. Got it? Next, what is the exception to E point? There is a restaurant in a hotel. There is a restaurant in a hotel. That hotel is having a tariff per day greater than 7,500. Hotel room rate greater than 7,500 rupees per day means definitely it's a 4-star, 5-star. Correct appa? Normal hotels per day room tariff will not be greater than 7,500. Actually speaking, definitely in Chennai means it should be a 5-star hotel only, because 4-star hotels also are not charging greater than 7,500. It will be 5,000, 6,000, etc. Only 5-star hotels wherein I have seen the tariff as more than 7,500. Example in Taj, Taj Mount or Taj Kanamera, etc., any Taj in Chennai, they are offering 10,000 rupees as per day for room. No doubt that is a 5-star restaurant. In the Taj Hotel, there is a restaurant. In the Taj Hotel, there will be a restaurant. From that restaurant, one person wanted to eat food through Swiggy. So he ordered, and in this case, who will pay GST? Swiggy will pay GST or the restaurant will pay GST? See there, exception, if the restaurant is in the specified premises, that is a hotel having a declared tariff greater than 7,500 per day, it is exception, which means who will pay GST? Supplier, that is restaurant will pay, e-commerce operator will not pay. Understood pa? Sir, is it per day greater than 7,500? Yes. All rooms greater than 7,500 or any one room greater than 7,500? Any one room. In that hotel, any one room greater than 7,500 rupees, then that will come under the hotel where the restaurant in that hotel only will pay GST. Got it? Next. Once again you want me to repeat. That's what a hotel, say in that hotel there are 50 rooms. In that 50 rooms, 40 rooms room tariff is less than 7,500 rupees per day. But 10 rooms are there, costly rooms. For that it is 9,000 rupees per day. Now in that hotel there is a restaurant. Now they are selling through Swiggy. Who will pay GST? Restaurant only will pay. Swiggy will not pay. Because in that hotel, any one room which is having the rate, room will have a rate na, that room rate greater than 7,500 per day, then it is an exception to 9.5. Liability to pay GST is on the supplier. Got it? Now, how to remember this? First you remember when 9.5 is applicable. Then you remember when 9.5 is not applicable. If 9.5 is applicable, who will pay GST? E-commerce operator. If 9.5 is not applicable, who will pay GST? Supplier. Now, when 9.5 is applicable, for H, A, T, E. H for provided the supplier is super. Number 2, A, accommodation services provided the supplier is super. Then third, T, transportation of passengers whether the supplier is registered or unregistered. Number 4, E, eating food from the restaurant whether the supplier is. This is 9.5. Can you remember this? Now, when 9.5 is not applicable, come on, for H, supplier is registered. A, supplier is registered. T, company, omnibus through e-commerce operator. Company, omnibus through e-commerce operator. What is omnibus? More than 6 or equal to 6 or? Super. Then for E, what is the exception? Eating food in restaurant. When 9.5 not applicable. Hotel, tariff per day greater than 7,500 and a restaurant in that hotel. You understood? Restaurant in a hotel, that hotel is having a tariff greater than 7,500. In these 4 cases, 9.5 not applicable, these are exceptions. So when 9.5 is not applicable, who will pay GST? Supplier only will pay GST. Understood pa? Now, come back to this table. So what are the notified services? HAT. Come back to page 37. What are the services through e-commerce operator notified? HAT. Apart from this, any other service who will pay pa? Supplier. Can you give me one example of, apart from these 4 services, any other service through e-commerce operator? Goods, goods. Flipkart is goods. Services will not be there. Clearly listen what I am telling. Services. Flipkart, Amazon, like that, don't tell. That is goods. I am asking services. How many times you would have booked a movie through Book My Show? Book My Show is a classic example of other service through e-commerce operator. Who is the supplier? Theatre. Who is the e-commerce operator? Book My Show. And the one who is booking customer is the recipient. Is it covered under 9.5? So who will pay GST? Theatre. Supplier only will pay GST. Then porter. When we book the vehicle through porter for transporting goods, will it come under 9.5 or it will not come under 9.5? Huh? Why not come under 9.5? Transportation of goods. Here also 9.5 also T is there. But that T is what T? Transportation of passengers. But this is transportation of goods. So that will not come under 9.5. Is it clear? Then who will pay GST? Supplier only will pay. What about supply of goods through e-commerce operator? One friend told me Flipkart, Amazon, then Meesho, etc. and all. Then who will pay GST? No doubt supplier. E-commerce operator will not pay. Only for 4 services. Liability to pay GST is on e-commerce operator. In all other cases, e-commerce operator will not pay. Supplier only will pay. Don't forget this point. They will twist it so badly in exam, so that you will definitely make a mistake. Be clear as to when 9.5 is applicable. Only 4 services through e-commerce operator. Are you understanding this? Next, sir, what about Zepto, Dunzo, etc. and all? They will not come under, first of all, services supplied through e-commerce operator, because they themselves are the suppliers. Zepto, Dunzo, they themselves are the suppliers, and they are providing the service directly like a courier operators, one-to-one. But when it will be called as supply through e-commerce operator, some supplier should be there, one intermediary platform should be there, and the recipient should be there. Then only it will be called as supplies through e-commerce operator. Then sir, what about this OLX, 99 acres, no broker, all these are listing platforms. Again, it is not e-commerce operator. So someone wanted to sell their property, they will list. And suppose if you purchase something through OLX and you came to know that product is not good, can you blame OLX? Can you complain to OLX? They will not be taking care of anything. But you buy something from Amazon, the product is not good. Can you complain to Amazon? Yes. That is what supplies through e-commerce operator means. Means e-commerce operator takes up the responsibility. Okay. Now, so in case of 9.5, how the supplier should be? For H&A, the supplier should be unregistered. For T&E, the supplier should be either registered or unregistered. How the recipient should be? Either registered or unregistered. We don't have any condition there. Who will be liable to pay GST to government? E-commerce operator. Under 9.5, liability to pay GST is on e-commerce operator. 9.4, it is on the recipient. 9.3 is also on the recipient. Clear? As we made a discussion related to e-commerce operator completely, the remaining points also we will see for 9.5, so that 9.5 gets over. Okay. So please take first 9.5. I don't know, somewhere my intuition is telling this time more questions, like definitely question will come on 9.5. Because many times they have not asked question on 9.5. That too because of some good number of amendments. You can expect a question on 9.5. Moreover, there is one more chapter that they have added for you from last attempt called as TDS TCS. That TCS is very much connected to e-commerce operator. So I have a strong feeling like either September or Jan or both attempts, they can coin some questions on e-commerce operator. So please mark these areas very, very important. This table you understood now? You want me to repeat? Now look into the important points below. When e-commerce operator is liable to pay GST on above services, they are not required to deduct TCS under section 52. There is a concept called as TCS, tax collected at source, not under income tax. GST TCS is there, where e-commerce operator will pay the TCS on behalf of the supplier. Why e-commerce operator will pay TCS on behalf of the supplier? Because the suppliers will not report the correct turnover. They will report a lesser turnover and pay a lesser tax, mainly to catch those suppliers who are not reporting proper turnover. They have kept the check on e-commerce operator. Sir, why e-commerce operator will comply? Because it is not their money, someone's money with them, they are paying TCS. Why will they default? Pa, my money I will not pay, pa. But someone's money when I have, will I pay or not? Now e-commerce operator is having the money of the supplier because he collected now from customer. So he will definitely pay TCS. If not TCS, you put any CS, he will pay. Because he has to pay not out of his pocket. He need to pay about some other person's money. Happily, like Karna, he will take and give. Correct or not? Because it is not their money. That's what government understood. So they are putting TCS on the e-commerce operator. So they will pay the TCS, which is 1% of the turnover. For example, if e-commerce operator paid 15,000 as TCS, then what will be the turnover of supplier? Huh? 15 lakhs, huh? Sure, huh? 15,000 is 1%. Then 100% is how much? That is 15 lakhs. So 15 lakhs will be the turnover of the supplier. You know how to do that in calculator and all. So 1 will be there. 1, 5, 3 zeros you should press. Divided by 1%. 1% means 0.01 you should press. Equal to like that when you press you will get. Okay. Because how to use calculator you should learn first. Keep the calculator somewhere below metro train. Yaar. Why you are having? 15,000 rupees TCS means it is 1%. What will be the turnover? 15 lakhs is the turnover. Now the supplier may report a lesser turnover, possible or not? He will report maybe 12 lakhs as turnover. Now immediately a notice will go to the supplier stating that, boss, your turnover is 15 lakhs, you reported 12 lakhs because e-commerce operator deducted TCS 1%, which is 15,000. Shows the reason why your turnover is not 15 lakhs. Why are you reporting a turnover of 12 lakhs? Automatically notice will go to the supplier. That's why they created TCS. Is it clear? Now concentrate, listen. In case of 9 subsection 5, who will have liability? Supplier or e-commerce operator? Now, why the government is bothered about that supplier? Not bothered. Because that supplier don't have liability. So, TCS is applicable or not? No. Why TCS not applicable? Because the liability itself is on e-commerce operator. Ayya, why they brought in TCS? Mainly to catch the supplier, whether he is reporting a lesser turnover or more turnover. When the liability itself is not on supplier, why we should collect the TCS? So therefore, TCS is not applicable in case of 9.5. Why TCS not applicable in case of 9.5? Because liability to pay GST on the transaction is on the e-commerce operator. Then what is the liability on the supplier? No liability. He will put a blanket and sleep. You understood or not? He don't have any liability. First of all, he is not into the discussion at all. He don't have any liability. Don't bother about him. You send him out. You understood or not? We are bothered only about e-commerce operator. That's why TCS not applicable. But when 9.5 is not applicable, who is having the liability to pay GST? He may report lesser turnover. Correct. That's why you put TCS on e-commerce operator. Understood or not? So, conclusion. Moral of the story. TCS under section 52 and section 9 subsection 5 is mutually exclusive. When 9.5 comes, TCS will not come. When TCS comes, 9.5 will not come. That is what I have given as a note there. Section 9 subsection 5 and section 52 are mutually exclusive. Then, second point. Only in case of notified services, e-commerce operator is liable to pay GST. In other cases, supplier shall pay GST and e-commerce operator shall pay GST on the commission. Agreed? Amazon, Flipkart case, who will pay GST on the goods? Supplier. Then Amazon, Flipkart will pay GST on what? They get a commission, na? Is Amazon, Flipkart NGO to do all these things without any remuneration? They get a commission. On the commission, they will pay GST. You got it? Same way, Book My Show. Theatre will pay GST on the ticket. But e-commerce operator, Book My Show will pay GST on the commission and convenience fee, internet handling fee, like that they are collecting, na? On that they will pay GST. The next point, you understood first and second? Every e-commerce operator who is liable to pay GST or who is liable to deduct TCS is compulsorily required to get registered. So they are telling every e-commerce operator who is liable to pay GST under 9.5, okay, that is HATE case. And in other cases, anyhow e-commerce operator will have TCS. So in one line you can remember, every e-commerce operator compulsorily required to get registered. They are telling liable to pay GST or liable to deduct TCS. Just now we learnt, if they are liable to pay GST, TCS will not come. If TCS is applicable, they are not liable to pay GST, which means every e-commerce operator is compulsorily required to get registered. That is a one line you can remember. Also, every supplier of goods through e-commerce operator is compulsorily required to get registered under GST irrespective of their aggregate turnover. However, that is an amendment. However, if such supplier is making only intrastate supplies, then they should register as and when their aggregate turnover exceed threshold limit. Highlight that and mark it as important. For example, I want to sell goods through Amazon, but I am unregistered. Read that point and tell me, can I sell or I cannot sell? I am unregistered. I want to sell goods through Amazon. Can I sell or I cannot sell? Read that and tell me. Can sell or cannot sell? Can sell. Can sell. But there is a condition. I should not make interstate supplies. Means I can make only intrastate supplies within Tamil Nadu. That's why sometimes in Meesho, when you enter your delivery code, they will say this product cannot be delivered to your location. Have you seen that? In Meesho, lot of products are available at a cheaper rate and you will select that in the cart. But when you select in the cart, at the time of checkout, if you give your delivery pin code, they will say this product cannot be shipped to your location. You know why? Because those suppliers are unregistered, they should not make interstate supplies, they can make only intrastate supplies within their state. Are you getting this? So, supplier of goods through e-commerce operator generally compulsorily required to get registered. But if they are not registered also, it's okay, but they cannot make interstate supplies, they can make supplies only within the state. Suppose if they want to make interstate supplies, they should register. Then next, what about supplier of notified services? Always they are required to get registered whenever their aggregate turnover exceed threshold limit. Every supplier of service through e-commerce operator, let it be notified service or other than notified service, they need to register only when aggregate turnover exceed threshold limit. For example, I want to sell my video lectures through e-commerce platform. Can I sell? There are a lot of e-commerce platforms na, for video lectures. Conferenza, Zero Fee, like that. So there are many websites. What they will do, even buy test series, like that. A number of websites are there through which we can sell our video lectures. Now, in this case, I am not registered. Can I sell video lectures through that website? Yes or no? Yes. Even though unregistered, I can make sale of video lectures through e-commerce operator. Interstate, intrastate, both. Both. That interstate, intrastate is only for goods. Video lectures is not goods. Video lectures is services. So therefore, whether it is intra or inter, I can definitely make. And when should I register? Only when my aggregate turnover exceed threshold limit. Clear, appa? Supplier of notified service and supplier of other than notified service through e-commerce operator is required to get registered only when aggregate turnover exceeds threshold limit for registration. Then next, motor vehicle, if you see, motor vehicle definition is there. Why this motor vehicle definition they have given, you know, transportation of passengers through any type of motor vehicle they have given, that's why. Now, you read the motor vehicle definition once. Quickly you go through the definition. I'll ask you a question. Okay? Now listen. There is one website called as Make My Trip. If you want to book flight tickets, you can book it through Make My Trip, GoIbibo, Clear Trip, like that. Lot of e-commerce websites are there. So there is a website called as Make My Trip through which you can book the flight tickets. Who is the supplier? Airlines. Who is the e-commerce operator? Make My Trip. Who is the recipient? Passenger. Now, whether it is covered under 9.5 or not covered under 9.5? Huh? Not covered or covered? Not covered. Why not covered? In the definition of motor vehicle, airline is not there. Only those vehicles which go on the roads. Can you see that? Which go on roads only will come under motor vehicle. So in that case, who will pay GST? Airlines will pay or Make My Trip will pay? Airlines will pay. So write down below example. Airline ticket booking through Make My Trip. Airline ticket booking through Make My Trip. Airline ticket booking through Make My Trip, comma, section 9.5 not applicable. Section 9.5 not applicable. Because airline will not be coming under motor vehicle, correct? Same way, can you book the train ticket through ixigo app? There is one app called as ixigo. You can book the train ticket through ixigo app. So who is the supplier? Indian Railways. ixigo is the e-commerce operator and the passenger is the recipient. In that case, whether 9.5 is applicable or not applicable? Not applicable, because train also will not come under motor vehicle. So only those vehicles which go on roads. Okay, because clearly it is given, but does not include a vehicle running upon a fixed rail. So train will not come under motor vehicle. Are you getting this here? Then this one table is related to TCS and e-commerce operator. We'll complete TCS and then we will come back to this. So this we will see later. Now look into the next page, page number 47. Page number 47. Supplies through e-commerce operator. So we have three parties. Who are the three parties? Supplier, e-commerce operator and recipient. Supplier and e-commerce operator should not be same. If supplier and e-commerce operator is same, then it will not be called as supplies through e-commerce operator. Example, Reliance Trends selling its garments through AJIO app will not be coming under supplies through e-commerce operator, because AJIO app as well as Reliance Trends, same person. However, if Reliance Trends sell the garments through Myntra, then it will be coming under sale of goods through e-commerce operator or supplies through e-commerce operator. Are you getting this? Same way, PVR cinemas allowing the people to book the tickets through their own app will not be coming under supplies through e-commerce operator. But if they allow people to book the tickets through Book My Show, Ticket New, Paytm, etc., then it will be coming under supplies through e-commerce operator. Clear or not here? Next. So this supplies through e-commerce operator is divided into three. Supply of goods through e-commerce operator, supply of notified service through e-commerce operator, and supply of other than notified service through e-commerce operator. What is the example for supply of goods through e-commerce operator? Already you told me, Amazon, Flipkart. In this case, who will pay GST on the transaction? On the transaction, who will pay GST? Supplier, very good. Supplier will pay GST on the transaction. Then what is the liability on e-commerce operator? They have to pay GST on the commission and other charges. Clear? Now, whether this e-commerce operator is compulsorily required to get registered or not required to register? Compulsorily required to get registered because they need to deduct TCS or not required to deduct TCS? Required to deduct TCS because they need to identify the supplier's turnover, yes or no? So therefore, this e-commerce operator is required to deduct TCS, so e-commerce operator compulsorily required to get registered. Whether this supplier of goods is also compulsorily required to get registered or not? Generally, yes, but if they don't want to make interstate supplies, they are not required to get registered. Correct? We saw that point here above, it is just the repetition of that. Then supply of notified services through e-commerce operator, who will pay GST? E-commerce operator, that HATE case. Now in this case, what will be the liability on supplier? Nothing. There won't be any liability on the supplier because entire liability is on the e-commerce operator. TCS applicable or not applicable? Not applicable because 95 is applicable. Whether this supplier is required to get registered or not required to get registered? Required to get registered whenever aggregate turnover exceed threshold limit. Then third case, supply of other than notified service through e-commerce operator. Who will pay GST on the transaction? Supplier will pay GST on the transaction. Then what is the liability on e-commerce operator? Commission. GST on commission. TCS applicable or not applicable? TCS? Why applicable? Because the liability is on the supplier, they need to identify the turnover of supplier, so TCS will be applicable. Whether this supplier is also compulsorily required to get registered? No, they need to register whenever aggregate turnover exceeds threshold limit. Now, look into this. This illustration too is also connected to TCS, that's why I am just passing it. And look into the flow chart determining the e-commerce operator liability. Section 9, wherever it comes, the parallel section is section 5 of IGST. Whenever you are referring to section 9, the same information is there in section 5 of IGST. Section 9 is liability to pay GST na. In IGST Act you update section 5 also liability to pay GST. You have written the CGST Act sections, IGST Act sections na. In that CGST Act sections, you have already written section 9 means liability to pay GST. Same way, in IGST Act you update section 5 is liability to pay GST. IGST Act section 5 is liability to pay GST. Now see this, section 9 or section 5 of IGST Act. First we need to check, is the person e-commerce operator? No. Then this discussion is not applicable. Yes. Is the supply made through e-commerce operator? No. Then also this discussion not applicable. Yes. Is the supply of service notified? No. Then e-commerce operator will not pay GST. Who will pay? Supplier will pay. If that supply of service is notified, then who will pay GST? E-commerce operator will pay, and all the provisions are applicable to e-commerce operator. Now, check whether that e-commerce operator is having physical presence in the taxable territory. If yes, the e-commerce operator will register and pay GST. Example, Ola is an e-commerce operator. Are they having physical presence in India? Yes, so they will register and pay. What if they don't have a physical presence? Check whether they have a representative in India, then that representative will pay GST. Example, Uber. Uber is having physical presence in India? No, it's a foreign company. Uber is a foreign company. They don't have physical presence in India. But do they have a representative in India? Yes, who enter into contract with the drivers, so that representative will register and pay GST. Then, what if they don't have a representative also? Example, so Urban Clap. Urban Clap is a Dubai based website and they don't have physical presence, nor they have a representative. So what they should do? Appoint a representative in India. That representative should register and pay GST. See the last one. If they don't have a physical presence, nor they have a representative, such e-commerce operator shall appoint a person in the taxable territory for the purpose of paying tax, and such person shall be liable to pay tax. Is it clear here? So fully we completed 9.5 and TCS related information only we did not see. Now come back to 9 subsection 3, list of notified services under RCM. Page number 38. Now here, once again there is a revision related to exemptions. Few exemptions we will be coming across. Somehow you need to remember this table in your mind. So that is the effort which we are trying to make now. Okay, first, what are the list of services covered under RCM? That you remember first. Sir, CG got salads. You just know what is that expansion, that is enough for now. First step. You need to know what are the list of service covered under RCM. Sir, CG got salads. What is yes means? Yes means what? So don't see anything else. Just see the first column. What is yes means? Security lending under SEBI. So under Securities and Exchange Board of India, there is a concept called as security lending. I have securities. I will lend you the securities. You will borrow the securities. You will pay me lending fee. On that you will pay GST. Okay, pa. Sir, won't it come under a transaction in securities? No, because I am not selling you the securities. I am giving you the securities on lending. Lending means I am not selling. That's why it is not excluded from goods and services definition. Are you getting this? Now, what is a yes? Yes for security lending. I for import of services. So in all these cases, who will pay GST? Recipient will pay GST. Remember, R for recipient will pay GST, RCM. Okay. Now, yes for security lending, I for import of services, R for renting of motor vehicles, another R for renting of residential property. Sir, okay, once again, SIRR, yes, security lending, I, import of services, R, renting of motor vehicles, another R, renting of residential property. Okay, then next, CG, C for copyright services, that is temporary transfer of IPR. Okay, what are those copyrights? 4 copyrights pa. Original literary means books, novels, etc. Then dramatic, story, script writing, screenplay writing, story writing, etc. Then musical works, music director, composing the music, artistic works, paintings, drawings, sculptures, etc. So what are the 4 copyrights? Original literary, dramatic, musical, artistic. Okay, these 4. So G for goods transport agency services, GTS services. Okay, sir, CG, can you tell me? Yes, security lending, I, import of services, R, renting of motor vehicles, another R, renting of residential property. Then C, copyright related to original literary, dramatic, musical, artistic. Then G, GTA services. Okay, sir, CG. Now got, GOT. G for government services to business entities. O, overseeing committee services to RBI. Usually RBI will be appointing a committee called as overseeing committee just to revamp or restructure the non-performing assets. Banks will have not lot of non-performing assets now. People will borrow money, they will not repay, etc. To restructure these NPAs, they will appoint one committee called as overseeing committee. Okay, so overseeing committee services to RBI. T, already we discussed. TDR, FSI, long-term lease. We discussed now exemptions chapter. TDR, FSI, long-term lease. TDR full form, transferable development rights. FSI, floor space index and long-term lease. Okay. So, sir, CG got. Once again, please. It will be paining only for you, but till. So that in exam also, the moment you see that, you will know it is covered under RCM. Okay. S for security lending. I for R, renting of motor vehicles. Another R, renting of residential property. Sir, C, copyright services. G, copyrights related to 4, original, literary, dramatic, musical, artistic. G, GTA services. Then GOT, G, government services to business entities. O, overseeing committee services to RBI. T, TDR, FSI, long-term lease. Now last, salads. S for sponsorship services. A for agents. So agent services, total 5 agents are covered. Insurance agent, to whom they will provide, insurance company. Recovery agent, to whom they will provide service, banks. And direct selling agent, again to banks. Then business facilitator, then agent of business correspondent. Okay, total 5 agents. Insurance agent, recovery agent, direct selling agent, business facilitator. Already I told you who is business facilitator. Then agent of business correspondent. Business correspondent not given. Agent of business facilitator not given. Only business facilitator and agent of business correspondent. Then A, S, A, L, A, D, S. S for sponsorship. A for agents. L for legal services by individual advocate or firm of advocates. Then A, arbitrator. In legal service we saw na advocate and arbitrator. That legal services by advocate, A, arbitrator. Then D, yes, D for director services to company or body corporate. Last, yes, security agency service. Who will come under security agency? Outside shopping complexes, education institutions, hospitals, banks, some security personnel will be there, na security people. So that supply agency, basically they supply the manpower. That manpower is security manpower, okay. So that is security agency services. So this is the list of services which is covered under RCM, okay pa? Yes, could you remember what is the list? At least list you could remember. Sir, CG got salads. Yes, salads alone you tell me once again. S for sponsorship. A for agents. L for legal service by individual advocate or firm of advocate. A, arbitrator. D, director services. Yes, security agency services. Now, after remembering this list, now what you need to do is that, what is the service under RCM? What are the exemptions? Because in case of exemption, we don't have to pay na. What are the exemptions? Then we need to know what are the conditions for RCM. Finally, when RCM is not applicable, even though that service is there in RCM, but it will not be applicable. Why RCM not applicable? Maybe conditions not satisfied. That's why RCM not applicable. So now, first column you know, The remaining 3 columns you should know. In that second column also you know actually, because we learnt exemptions, and only 2 more columns you should be knowing. Got it? Can we start? Now, you all get up and sit once. Good. Sit. Say this. First one, security lending. See your book now. Security lending. Anywhere in the exemption chapter we studied any exemption for security lending? No. So not applicable. No condition for RCM, no non-applicability of RCM. Leave it. You understood? Then I, for import of service, whether we discussed any exemption. What? Other than OIDR by non-taxable recipient is exempted. We studied na. So that is exempted. Other than OIDR by non-taxable recipient is exempted. Any condition for RCM? No. No condition for RCM. Any non-applicability of RCM? Yes. In case of OIDR services imported by non-taxable online recipient, the liability to pay GST is on supplier. But generally import of service, who will pay GST? Recipient. But in case of OIDR services imported by non-taxable online recipient, supplier will pay GST under FCM. So that's where it is not applicable under RCM. Now, what is the meaning of non-taxable online recipient? See there. Any unregistered person or registered person only for deducting TDS will come under non-taxable online recipient. Example, I am subscribing for Netflix. I am a registered person. Now, who will pay GST? I am subscribing for Netflix. I am a registered person. Who will pay GST? FCM or RCM? RCM. Because I am a registered person, I will not come under NTOR. Now, you are subscribing for Netflix. Who will pay GST? Netflix. You will not pay GST because you are a unregistered person. Are you getting this? So, import of OIDR service by non-taxable online recipient, it will not come under RCM. If it is not coming under RCM, then where it will come? FCM. You understood or not? Clear? So, can you tell me full point about OIDR services, import of services first? Import of services. What is the exemption? Other than OIDR by non-taxable online recipient or non-taxable recipient? Non-taxable recipient. When you will bring NTOR, only when there is NTR versus NTOR. What is extra? O. That O will come only when there is OIDR. You understood? So, other than OIDR, you should apply OIDR, you should apply NTOR. Now, what is the difference between NTR and NTOR? Meaning. NTR means individual, trust, government. NTOR, any unregistered person or registered person only for deducting TDS. So, name like meaning completely changes here. Okay. So, what is exempted? Can you tell once again? Other than OIDR by non-taxable recipient is exempted. And any condition for RCM? No. Any non-applicability of RCM? Yes. Only one case. What is that? OIDR by non-taxable online recipient. Okay. If RCM not applicable, then who will pay GST? FCM. Supplier will pay. Then look into renting of motor vehicles. For renting of motor vehicles, do you remember the exemptions? Yes. What is that? 4 exemptions. Capacity more than 12 passengers, state road transport undertaking. Already it comes in exemptions, but I am just connecting it here for you to easily refer. Then hiring of electric motor vehicle more than 12 passengers to local authority. hiring a motor vehicle that can carry goods to a goods transport agency, hiring a motor vehicle to a person who in turn provides transportation service to educational institution providing education up to 12th standard or equivalent. Then these are exemption. In remaining cases it will be taxable. Now what are the conditions for RCM? Remember, first condition, the supplier should be other than body corporate. Who is a body corporate? Private limited company, public limited company, or body established under any law. Okay, somewhere you write down body corporate meaning. Here itself you write down body corporate. What is the meaning of body corporate? Private limited or public limited or body under any law for the time being in force. For the time being in force. Body corporate means private limited or public limited or body under any law for the time being in force. Okay. So what is the first condition they are telling for renting of motor vehicles to come under RCM? Supplier should be other than body corporate, means who per supplier should be? Individual or firm, okay, or HUF, like that. And recipient should be body corporate. Second condition, could you see that? Supplier is other than body corporate, recipient is body corporate, and the rate of GST should be. If all these three conditions are satisfied, then it will come under RCM. All the three conditions should be satisfied. It is not or, it is and, okay, and all the three conditions should be satisfied. So what are the three conditions? Once again, please, these conditions are for renting of motor vehicles to come under RCM. Supplier should be other than body corporate, recipient should be body corporate, rate of GST should be 5%. If any one condition not satisfied, then RCM not applicable, so FCM, that is the next column. If any one condition is not satisfied, then it will be FCM. Body corporate means company or body under any law. LLP is treated as company, that is body corporate or firm. Under GST, LLP is treated as firm only, it will not be treated as body corporate. Is it clear? So in exam, when they give supplier is LLP, recipient is private limited company, rate of GST 5%, can we apply RCM? Yes, because supplier should be other than body corporate, LLP other than body corporate, recipient should be body corporate, yes, a private limited company, rate of GST 5%, so yes, we can apply RCM. Understood? Next, look into renting of residential property. For renting of residential property, what is the exemption? Residential property, residential purpose to unregistered person, or residential property for residential purpose to a registered individual for their family stay. Correct? And in remaining cases, it will be taxable. What is the condition for RCM? This also I told you. Residential property, if the recipient is registered, it will come under RCM. Correct? See there. Recipient should be registered, then it will come under RCM. Otherwise, it will not come under RCM. Is it clear? This already I told you. In yesterday's class only, I made you write this also. So while discussing tenancy premium, I told you this point. This. When is it exempted? When RCM will be applicable. Okay. Now, you understood about renting of residential property also? Go to copyright services. What are the 4 copyrights? Original literary, dramatic, artistic, musical. In all these cases, do we have any exemptions? Whether we studied any exemptions before? No. So we don't have exemptions. Do we have any conditions for RCM in all these cases? No. And only in one place we have an exception to RCM. Which place you see there? Original literary. In case of original literary, who is the supplier, who is the recipient? Author is the supplier and recipient can be publisher or any other person. But one more point you should know is that in case of copyright services, the supplier is individual. The supplier is individual, means in case of this original literary, dramatic, musical, artistic works, the supplier will be individual. All these are owned by the individuals. Copyright, original copyright will not be given to the companies, it will be given to the individuals. So these are all belonging to individuals. For example, I am an individual, I transfer the copyright to a publisher. Now publisher transfers the copyright to another publisher. Now in that case, whether RCM is applicable or not applicable, first publisher transferring to second publisher, RCM applicable or not applicable? Not applicable. Only when the author is transferring it to the publisher, it will be applicable. Is it clear or not? So in all these cases, you just write down supplier should be individual. So in case of original literary, dramatic, musical, artistic works, supplier is individual. Supplier is individual in all these cases, common. Okay. Now see the exception to RCM. If the author opts to pay GST under FCM, then for the next 1 year, author only will pay GST under FCM, publisher will not pay. Now, why will an author opt to pay GST under FCM? Because if my outward supply is covered under RCM, if my outward supply means I am making sales, that is not covered under FCM. RCM means who will pay GST? My recipient will pay GST. For me, it is treated as exempted. So I cannot take ITC on my inward supplies. What are the inward supplies of the author? They will buy a laptop, they will be receiving renting, they will receive telecommunication service, they will receive internet service. On all these things, if they want ITC, so definitely they only should pay GST under FCM. Is it clear or not? So the author opts to pay GST under FCM. If the author opts to pay GST under FCM, what is the condition? For the next 1 year from the date of excising the option, the author only should pay GST under FCM. They cannot put the burden on publisher. For RCM to FCM, is there any lock-in? No lock-in. Primarily, the liability is on publisher. Are you listening or not? Sir, I am an author, you are a publisher. Primarily, who will have liability? Publisher. But if I opt means I select the option. If I select the option, the liability will be shifted to me, means I will pay GST to government. Got it? But can I immediately put the burden again on you, shift the liability to you? No. For the next 1 year, I should only pay GST under FCM. That is this. If author opts to pay GST under FCM, lock-in period 1 year from the date of excising the option. Then look into GTA services. For GTA services, what are the exemptions we have studied? Notified goods. If the recipient is individual, HUF, AJP, unregistered and not having a factory. Or third point, if the recipient is registered only to deduct TDS. Same already whatever we discussed, today's discussion only, okay. So these 3 cases, it is exempted. What are the notified goods? Agricultural produce, food grains, including flours, pulses, milk and salt, organic manure, newspapers and magazines, defense and military equipment, relief material for natural and man-made disasters. Then, is there any condition for RCM? No. Is there any non-applicability of RCM? Yes. Like author, GTA also can opt to pay GST under FCM. But for author, it is lock-in for 1 year from the date of excising the option. But for GTA, it is 1 financial year. Please see the difference. For the author, it is 1 year from the date of exercising the option, but for GTA it is 1 financial year, means this financial year either FCM or RCM, but not both. You understood? So GTA opts to pay GST under FCM, there is a lock-in period for financial year. And when they should exercise this option? When they should exercise the option? Previous year, last quarter, they should exercise the option. Last year, last quarter. Means what is the last quarter? Jan to March of the preceding financial year, they should exercise the option, and therefore that will be determined for the current financial year. For example, between Jan to March, they selected RCM. Means for this financial year, it will be. This year, last quarter, they selected FCM. Means for the next year, it will be. Are you understanding this? Next, look into government services. For government services to business entity, we have 14 specific exemptions. Correct? RTA charges, then interdepartmental services. So telecom spectrum before 1/4/2016, both one-time charges and annual royalty, and other natural resources before 1/4/2016, one-time charges. Like that we saw yesterday. That again I gave here for your reference. Okay. Again I gave here so that you don't have to refer to that page. Here itself I gave. Is there any condition for RCM? No. No condition for RCM. Is there any non-applicability of RCM? Yes. There is a non-applicability of RCM. What is that non-applicability of RCM? Listen for 2 points, very, very important. Indian Railways will always be covered under FCM. Indian Railways also will provide services to business entities, na? It will never come under RCM, it will be FCM. In case of supply of goods or service by Indian Railways, always it will be FCM. Then, in case of renting of immobile property to an unregistered business entity, then also it will be FCM. Now you will get a doubt. Sir, you said renting of immobile property to unregistered person is exempted now, sir. Why it is coming here? That is residential property. This is commercial property which is given to unregistered business entity by government. Now in that case, who will pay GST? Government only will pay. Again I am repeating, carefully listen. Generally, government services to business entity, who will pay GST? Business entity will pay GST under RCM. However, there are 2 cases where government only will pay GST. Means government will pay GST to government? Yes. Government will pay GST to government. Why, sir? Because it is not paying out of their pocket. They are in turn collecting it from the next person. Okay. So what are the 2 cases where they will only pay GST? Number 1, renting of immobile property. To whom? Unregistered business entity. Number 2, Indian Railways. Then next, O for overseeing committee services to RBI. Anywhere we have discussed exemptions to this? No. So, taxable. Any condition for RCM or non-applicability of RCM? Nothing. Then look into TDR FSI long-term lease. Is there any exemption for TDR FSI long-term lease? Yes. What is that exemption? Proportionate to residential units booked before completion certificate divided by total carpet area. Today only we discussed that. Proportionate exemption to residential units booked before completion certificate or first occupation, whichever is earlier. Any condition for RCM? No. Any non-applicability of RCM? Also no. For sponsorship services, whether we discussed any exemption? In yesterday's class we discussed. Recognized sports body, 6 recognized sports body: National Sports Federation, Inter-University Sports Board, Paralympic Committee, Central Civil Services Cultural and Sports Board, then Panchayat Sports Board, Indian Olympic Association. These 6 recognized sports bodies, if they collect sponsorship money, that is exempted. Already we covered that. And is there any condition for RCM? This also I told you. When sponsorship service will come under RCM? If the recipient is body, corporate or firm. What if the recipient is other than body, corporate or firm? It will come under FCM. Yesterday evening one student asked me this doubt. Sir, in sponsorship service, who is supplier, who is recipient? Sir, I am getting confused. Simple. The organizer of the event is the supplier, the sponsorer is the recipient. In our example yesterday, BCCI collected sponsorship money from Tata. Now, who is supplier, who is recipient? BCCI is supplier, Tata is recipient. The one who pay the sponsorship money is the recipient. You understood? Automatically, the one who pay money is only the recipient. Correct? You go and join in coaching center, pa. You pay fees, you receive fees. Pay fees. So, who will receive fees? Coaching center. Who is supplier, who is recipient? And you are recipient, correct? Like that, you give the sponsorship money to BCCI. Who is supplier? BCCI. You are recipient, okay? Next, agent services. In that agent service, for insurance agent, is there any exemption? Yes, we discussed. Business facilitator or business correspondent in rural area is exempted. Hope you remember that discussion. And any condition for RCM? No. Any non-applicability of RCM? Also no. Recovery agent to bank, financial institution or NBFC. So, do we have any exemption? No. For recovery agent, no exemption. No condition for RCM, no non-applicability of RCM. Direct selling agent to bank, financial institution or NBFC. There also we don't have any exemption. And there is a condition for RCM. What is the condition for RCM? You see that supplier should be other than body corporate or firm. Supplier or recipient? Supplier. What if the supplier is body corporate or firm? It will not come under RCM. It will be FCM. Then business facilitator to banking company. Is there any exemption we studied? Yes. What is that? Rural area. If they are earning commission in rural area, it is exempted. And any condition for RCM? No. Non-applicability of RCM also? No. Agent of business correspondent to business correspondent. Whether we studied any exemption for them? Yes. Rural area exempted. Otherwise, it will be taxable. No conditions for RCM. Then legal services and arbitrator services. What are the exemptions we studied for legal services? Today only 4. If they provide service to individual, if they provide service to another individual advocate or firm of advocate, if they provide services to government, central government, state government, local authority or government authority, if they provide services to a business entity whose turnover during previous year does not exceed threshold limit. In this 4, for arbitrator and senior advocate, only 3 is applicable. First one, third one, fourth one. Correct? That is this. Arbitrator services and advocate service. Any condition for RCM? No. Non-applicability of RCM also no. Director services. For director services, anywhere we studied exemptions? We have not studied. Director services where we studied exemption. That is not exemption, na. That is not a supply. What is that? Not a supply. If the director is an employee, then whatever salary that they receive is not a supply. Got it? See there. If director is an employee of the company or body corporate, then it is not a supply. Any condition for RCM? No. Any non-applicability of RCM? Yes. That's the latest amendment. Concentrate. I am a director. Concentrate. Please listen. I am a director. I have a commercial property which I am giving on rent to the company. Now company will pay me rent. FCM or RCM? Generally renting of commercial property will be FCM or RCM? Ayya, residential property only RCM ayya. Where it is there in the list commercial property? R for renting of residential property. Commercial property is not RCM. Residential property is only RCM. So I am renting commercial property. Normal renting of commercial property is FCM. So I should pay. But director service to company or body corporate, RCM, which means that there is a conflict here. Director, being a director, when I provide service to company, it is given in the list of services under RCM. Suppose if I rent the commercial property, only residential property is given under RCM. but commercial property not under RCM. So which will prevail? They are telling whenever director is giving the property on rent to the company, is he acting in the capacity of director or not acting in the capacity of director? Not acting in the capacity of director. So it is his personal capacity. So you determine normally FCM. You understood? Director providing service in personal or private capacity, it will be covered under FCM. Then next, last, security agency services. For security agency services, do we have any exemption? No, we don't have any exemption. And any condition for RCM? Yes. See there, two conditions. Supplier should be other than body corporate, and the recipient should be registered. Not recipient is body corporate. Supplier should be other than body corporate, and the recipient should be registered but not opting for composition scheme, not registered only to deduct TDS. So tell me what are the two conditions for security agency? Supplier should be other than body corporate, recipient should be registered not for composition scheme and not registered only to deduct TDS. If any one condition not satisfied, then it will come under FCM. Now this is the list of services which are covered under RCM. Whenever you are writing about RCM, what is the notification reference that you need to give? Notification 13 of 2017. Notification 12 2017 is goods under notification 12 2017, goods under RCM, correct? Exemptions, list of exemptions, okay. So you have written the section index na, you take that page. GST Act section index you written na, there itself you write notification 12/2017. Notification number 12/2017. What is notification 12/2017? Services which are exempted. Notification 12/2017. Services which are exempted. So whenever you are writing that it is exempted and all, you should give reference to notification 12 of 2017. Then next, services, that is 13/2017, notification number 13/2017. What is that 13/2017? List of services under RCM. So whenever you are writing RCM, give reference to 13/2017. Whenever you are writing that it is exempted, give the reference to 12 of 2017. Okay. Clear pa? Now wait, don't see your book. Tell me for which services we have conditions for RCM. Renting of motor vehicle, security agency, okay, super. GTA there is no condition for RCM. Sponsorship, for legal service there is no condition for RCM. Direct selling agent, okay. Renting of motor vehicles already they said pa. Renting of residential property, original literary there is no condition for RCM. GT also no condition for RCM. I am asking conditions for RCM. Only 5 places. See your book. See. Conditions for RCM only in limited places you have. Don't get confused. What are the places we have condition for RCM? Renting of motor vehicles, renting of residential property, then sponsorship services, direct selling agent services, and then security agency services. Only in these places we have. Got it? Now wait. For renting of residential property, what is the condition for RCM? recipient should be registered. Then for sponsorship, what is the condition for RCM? Recipient should be body corporate or firm. For renting of motor vehicles, what is the condition for RCM? Supplier should be other than body corporate, recipient should be body corporate, rate of GST should be 5%. Good. For security agency, what is the condition for RCM? Supplier should be other than body corporate, recipient should be registered, not body corporate, recipient should be registered but not opting for composition scheme or not registered only to deduct TDS. Then what is the next thing? Direct selling agent. For direct selling agent, what is the condition for RCM? Supplier should be other than body corporate or firm. Now listen. First you need to remember list of service under RCM. Sir, CG got salads, you will remember. Exemptions by default you will remember, because when you read the exemptions that will come here. So extra effort what you need to take is to remember these 5 situations. What are the conditions for RCM? That's it, pa. Any question you will be able to write. Okay. Now we are having one more area, 9.4. If we complete this 9.4, liability to pay GST is over. So please concentrate. We will quickly complete this. Take a lunch break. Thereafter we will see the questions. So I gave you the handout. So I think day 2 handout I asked you to bring na. In that there are lot of questions for application of RCM as well as exemptions that we will discuss. Okay. Now listen. 9 subsection 4. When 9 subsection 4 is applicable, there is a promoter or builder who is making inward supply from a unregistered person. Sir, what if promoter or builder is making inward supply from a registered person? Whether 9.4 is applicable or not applicable? Not applicable. Okay. Now, rather than discussing about this 9.4 etc., I will tell you what are the steps involved in 9 subsection 4 so that you will get an idea. You see this? It's already there. This steps is already there. No need to make note, but please concentrate. That will be sufficient for me. First you need to see capital goods. All these are inward supplies of whom? All these are inward supplies of promoter or builder. Inward supplies of promoter or builder. Inward supplies of promoter or builder. Now, first we need to see capital goods. Check whether capital goods are purchased from a registered person or unregistered person. Okay, pa? In the question, first you see capital goods, whether purchased from a registered person or unregistered person. If capital goods are purchased from registered person, 9.4 applicable, 9.4 not applicable. 9.4 not applicable, so leave it. Because already you purchased from a registered person, means you paid him GST already, so you don't have to pay any GST under RCM. Understood or not? Now, suppose if you purchase capital goods from unregistered person, 9.4 is applicable or not applicable? Applicable means GST payable under RCM. Which section? 9.4. At what rate? At applicable rate to capital goods. At applicable rate to capital goods we will pay. You understood the first step? So in the question, first you see capital goods purchased from registered person, ignore. Why you need to ignore? Because RCM 9.4 not applicable. Suppose you purchase from unregistered person, see how much you purchased, see the rate, value into rate, you pay GST under RCM. Understood? Then next second. Second, you see cement in the question. Purchased from registered person, purchased from unregistered person. If cement is purchased from registered person, section 9(4) applicable or not applicable? So, suppose if cement is purchased from unregistered person, 9(4) is applicable or not applicable? Applicable. So, you need to pay GST under RCM. At what rate? GST payable under RCM, section 9(4) at what rate? 28%, because the rate applicable to cement is 28%. So, 28% we need to take. Then next, number 3. Understood for first step and second step? First step, what you will do? Capital goods. You will check whether purchased from RP or URP. If purchased from RP, ignore. If purchased from URP, pay GST under RCM at the rate applicable to capital goods. Then second, cement you will check. Purchased from RP or URP. Purchased from RP. Purchased from URP, unregistered person. Pay GST under RCM at the rate of 28%. Means how much ever is the value into 28% you need to pay under RCM. Understood? Next, third. Other inputs and input services. Other inputs and input services from unregistered person. Other inputs and input service from unregistered person divided by total inputs and input services. Okay. Other inputs and input service from unregistered person. Other means other than cement. Already we considered cement. Other inputs and input service from unregistered person divided by total inputs and input service into 100. If this is up to 20%, if it is up to 20%, means what? 20% is the relaxation limit. Up to 20% you can buy from unregistered person, it's okay. Should we pay any GST under RCM or ignore? Ignore. Suppose if you purchase from unregistered person which is more than 20%, then GST payable under RCM under section 9(4) on excess above 20%, because up to 20% is the allowed limit. Up to 20% is the allowed limit. So, on the excess above 20%, at what rate you need to pay? 18%. Even though the rate applicable to these other inputs and input service is less than 18% also, but you need to take 18%. So, first step, listen carefully. First step, cement or capital goods. Capital goods. Purchase from RP, ignore. Purchase from URP, pay GST under RCM at the rate applicable to capital goods. Second, cement. Purchase from registered person. Purchase from unregistered person. GST payable under RCM under 9(4) at 28%. Other inputs and input service from unregistered person divided by total inputs and input services into 100. If it is up to 20%, leave it. Allowed, leave it. If it is beyond 20%, say 26%, what is excess? On that 6% excess amount, you need to pay GST under RCM at what rate? 18%. Okay. Now, kindly make note of this illustration and solve this. Illustration 1 on section 9(4). Inward supply rate from registered person from unregistered person. Inward supply rate from registered person from unregistered person. cement 28%, from registered person 10 lakhs, from unregistered person 5 lakhs. Then other inputs rate 12%, from registered person, so 20 lakhs, from unregistered person 7 lakh 50,000. Input services 18%, from registered person 10 lakhs, from unregistered person 6 lakhs. Capital goods rate is 5%, from registered person 40 lakhs, from unregistered person 10 lakhs. Compute GST payable under RCM. Compute GST payable under RCM under section 9(4). Come on, try this. Just stick on to the steps. Whatever steps, 3 steps I discussed with you, just apply those 3 steps, you will get the answer. Please try, please make an effort. Only when you put the pen on the paper, you will know what you understood or what you have not understood. Don't listen to you, the person sitting next to you. He will disturb. He will allow you not to do. He will allow you not to become successful. You be successful. Done, everyone? Can I discuss the answer or you want me to wait? Okay. Yes. So first we will see capital goods. First step, capital goods. Capital goods purchased from registered person or unregistered person? Registered person and unregistered person. Registered person should be considered while computation? No. Unregistered person, how much? Capital goods 10 lakhs into what is the rate of GST? 5%. That will be 50,000. Step number 2, cement. How much is purchased from unregistered person? Purchased from unregistered person 5 lakhs. And what is the rate? 28%. So 5 lakhs into 28%, that is 1,40,000. Now see other inputs and input services from unregistered person. Others from unregistered person divided by total into 100. What is the other inputs and input service from unregistered person? 7,50,000 and 6 lakhs. What is 7,50,000 and 6 lakhs? Huh? 13,50,000 divided by total. While taking total, everything you take except capital goods. Total inputs and input service except capital goods. Cement should be taken here. Cement is also one of the input. Except capital goods, everything you take. So 10 plus 20 plus 30, that itself is 40. Then 45 plus 7,50,000 plus 6 lakhs. Everything should be taken. Every input and input service should be taken. Total. So what is the total? 58,50,000 into 100. How much? 13,50,000 divided by 58,50,000 into 100. That will be 23.0769%, which is greater than 20%. So should we pay GST under RCM? Yes. On what amount we need to pay? 58,50,000 into 3.0769% into what is the rate of GST? The rate of GST is 18%. But sir, the applicable rate of GST is 12%. Let it be, but we need to take 18%. So 58,50,000 into 3.0769% into 18%. That will be how much? 32,399. So 32,400. So what is the total GST payable under RCM? 50,000 plus 1,40,000 plus 32,400. That will be 2,22,400. Are you understanding this? One more illustration, can you try? Yes. Illustration 2. Inward supply, rate from registered person, from unregistered person, for cement 28%, from registered person 15 lakhs, unregistered person 0. Other inputs 12%, from registered person 15 lakhs, from unregistered person 10 lakhs. Then input services rate 18%, from registered person 20 lakhs, from unregistered person 5 lakhs. Then capital goods from registered person, this is 5%, from registered person 50 lakhs, from unregistered person 5 lakhs. Compute GST payable under RCM under section 9(4). Huh. $1,76,000. First, capital goods. Capital goods purchased from unregistered person, how much? 5 lakhs into 5%, how much? 25,000. This you would have done correctly. Cement, nothing is purchased from unregistered person, so 0. Then others from unregistered person divided by total into 100. What is others from unregistered person? 10 lakhs and 5 lakhs, that is 15 lakhs divided by total. While doing total, you take everything. 65 lakhs into 100, how much? 20. 15 lakhs divided by 65 lakhs into 100, 23.0769. Same percentage, huh? Oh, super. So then, what is the GST payable? 65 lakhs into 3.0769 into what is the rate? 18%. 36,000. So total GST under RCM under section 9(4) is 61,000 only. Where 1 lakh and all you got? 61,000 is the answer. And I gave one illustration in the book that is for your practice. You try that. I gave one illustration in the book that you can try. So we'll take a break. Understood upon 9(4)? Yes, sir. Let it be, because everywhere only 20% is allowed. For cement, the 20% problem also not there. Means for cement, everything you should pay under RCM. So for the total, out of the total, 20% is only allowed. That includes anything, okay? But cement, always we need to pay GST under RCM. We'll meet at 2 o'clock, pa. Say this. First we will see TCS and then we will move on to TDS, so that we will know what are the differences between TDS and TCS. Tax collected at source is given under section 52, whereas TDS is given under section 51. So please look into TCS. This is an example to understand how the TCS will work. Already I told you the logic behind the TCS. What is that logic that I told you? Mainly TCS is to identify whether the turnover is suppressed or not by the supplier. So supplier may be suppressing the turnover. Whether he is really reducing the turnover or not reducing the turnover while reporting it for the government is to be identified. For that only they have made this TCS as a checkpoint. Look into this. There is a supplier, MI Mobile. There is a e-commerce operator, Flipkart, and there is a buyer. First what happens, supplier will enter into contract with e-commerce operator to sell a mobile with a commission of 1000 rupees plus GST at 18%. Now e-commerce operator will list that product. Immediately the buyer will place an order for the mobile. When the buyer places the order for the mobile, supplier will deliver the mobile along with invoice to e-commerce operator. What is the price of the mobile? 10,000 plus GST 28%. So 12,800 rupees they gave an invoice. Now Flipkart will deliver the mobile to the buyer. Buyer has made a payment of 12,800 rupees to Flipkart. Understood up to this? Now Flipkart should remit the money to supplier. How much money they will remit? Now listen carefully. First Flipkart has 12,800. In that they need to retain their commission. What is their commission? What is their commission? See the first point. What is their commission? 1000 plus 18%, that is 1180. So please take your calculator. You are e-commerce operator, and how much is the money that you have? Customer money 12,800. First you will deduct your commission. What is your commission? 1180. Deduct minus 1180. And you should also deduct TCS. TCS is applicable or not? Yes, TCS is applicable because it is not 95 na. So TCS will be applicable. What is the rate of TCS? 1%. 1% of what? Value. What is the value? 10,000. 10,000 into 1%. 100. So deduct 100. What is the remaining amount? So 11,520 will be remitted to supplier. You understood this here? So how much is the amount remitted? Money collected from the buyer minus commission and GST on commission and the TCS. So this will be remitted. So e-commerce operator will pay GST on commission 180 and TCS 100. Now concentrate. This 180 rupees will be taken as input tax credit by the supplier. For commission, who is the supplier, who is the recipient? For commission part, who is the supplier? Ayyo, how MI will be supplier yaar? MI is paying the commission. MI is paying the commission. Who is the supplier? The one who is receiving the commission. Who is receiving the commission? Flipkart. So Flipkart is the supplier. And who is the recipient for that commission part? MI. So now Flipkart will raise an invoice on MI for commission 1000 rupees plus GST. That GST will be taken as ITC by MI. Is it clear or not? How much credit, input tax credit is available to MI? 1000 into 18%, 180. Now, whatever TCS that is paid by Flipkart will be in whose name? MI's name. So MI will be taking that TCS credit. So there are two credits available to MI. What are they? ITC on commission 180 and TCS credit 100 rupees. Now what they will do with respect to this credit? They have liability na. How much liability they are having? 2,800. From the 2,800, they will deduct 180 and 100. Remaining amount 2,520 they pay to the government. Is it clear or not? So what happens here is that the commission invoice raised by Flipkart to MI will take as ITC, plus the TCS deducted by the e-commerce operator will also be remitted to government in the name of MI. So MI will take that as credit, TCS credit, and that they can adjust with their liability. Actually it is not a loss for them. This TCS is not a loss for them. But what is the idea behind this TCS? Simple. Suppose if the supplier is not paying this GST properly. Now easily we can identify what is the turnover of the supplier. TCS is how much? 100. If 100 is the TCS, what is the value? 10,000. 10,000 into 28%, that is 2,800 is the liability of the supplier. And what credit they have? What credit they have? So 180 rupees input tax credit and TCS credit. So remaining amount they need to pay. Like that easily we can calculate even if the supplier has not reported it properly. Is it clear? That's why they brought in this TCS. Now, from this discussion, you tell me when TCS is not applicable. Section 95. Then, suppose if the supplier is unregistered. Suppose if the supplier is unregistered. Is the supplier having liability? No. As the supplier is not having liability, whether TCS is required or not required? Not required. So, first case when TCS is not available, not applicable, 95. Second case, supplier is unregistered. One more case, can concentrate. Suppose if the supply itself is non-taxable or exempted, should we bother about the supplier? The transaction is exempted transaction, should we bother about the supplier? No. So then also TCS is not applicable. Okay. Then next, payment not collected by e-commerce operator, payment is made by the buyer directly to supplier. Then also TCS is not applicable, because why will e-commerce operator deduct out of his pocket? He will not do that. Is it clear? So tell me 4 points when TCS is not applicable. Supplier is unregistered, then section 95, then exempted supplies or non-taxable supplies, then payment not collected by e-commerce operator. See that in the below important point, first point is that only. E-commerce operator liable to deduct TCS on behalf of every supplier when the following conditions are satisfied. Supplier should be registered. What if supplier is unregistered? Not applicable. Payment from buyer should be collected by e-commerce operator. What if payment from buyer directly collected by supplier? TCS not applicable. Such supply should not be notified under 95. What if it is notified under 95? TCS not applicable, because the liability is only on e-commerce operator. Such supplies should be taxable supplies. What if it is exempted or non-taxable? Tax itself is not there, so TCS will not be applicable. Clear pa? Now, any way you can write in exam. Suppose if the question is when TCS is not applicable, usually that will be asked as a short note question. When TCS is not applicable, you need to write the negative points for this. Suppose if they ask a question when TCS is applicable, you need to write these points. Okay. So tell me when TCS is applicable. Supplier is registered. Number 2. Supplies are taxable. Number 3. Supply not covered under 95. Number 4. Payment collected by e-commerce operator. Now tell me this. When TCS is not applicable. Supplier is unregistered. Then supplies are exempted or non-taxable. 3. Supply covered under 95. Number 4. Payment not collected by e-commerce operator. Then next, what is the rate of TCS? 1%. Now listen, what if it is intrastate supply? If it is intrastate supply, 0.5% CGST and 0.5% towards SGST. If it is interstate supply, 1% towards IGST. How do e-commerce operator know whether it is an intrastate supply or interstate supply? This supplier will raise the invoice na. In that invoice, if the supplier mentions IGST, then e-commerce operator will deduct 1% towards IGST. Suppose if the supplier mentions CGST, SGST, then the e-commerce operator will deduct 0.5% towards CGST and 0.5% towards CGST and 0.5% towards SGST. You understood or not? Now, that is this CGST, SGST 0.5 means. On what it should be computed? On the net value of taxable supplies, excluding GST. See below, what is the meaning of net value of taxable supplies? Aggregate value of supply of goods or services other than notified service under 95 minus taxable supplies returned by the supplier. What is this? Generally, if you see Mintra is there na, dress and all. What people will do, they will spend some 2000 rupees and they will buy a dress. They will wear the dress, full photo session it will happen, okay. and after that they will remove, pack it properly and book the return. You understood? And the person will take the dress, and the 2000 rupees will be given as Myntra credit. Again another address. Like this, their Instagram post full of different dresses only. And how here will they buy? No one is buying here. Everyone, thanks to Myntra, that 7-day return policy, 15-day return policy they have, na? Everyone will order, wear, do the photo session, thereafter return. Because the one who is taking that courier, will he smell and see whether it is used or not used? No, na. So he will just take and go. And this is also okay. Some people are there, they will wear it and go for the function also. The tag and all what they will do, the cellophane tape is there, na? They will hide the tag and they will paste inside. So the tag and all will not be visible. They will wear it to the function also, because one day function, why should we spend that much? So they will wear and thereafter they will return. Like this and all people are doing. But it's okay, you do. That is a policy. That's a business policy they are taking. Now in this case, should the TCS be applicable on the returned goods? No. Whatever is the supply made through the platform this month minus returns this month, that should be taken as the net value. Is it clear? For example, Myntra, turnover during the month is 5 lakhs. Returns during the month is 3 lakhs. So 5 minus 3, 2 lakhs, on which they need to compute TCS. Okay. Now see the another point. Turnover during the month 5 lakhs. Returns during the month 6 lakhs. How turnover 5 lakhs means returns will be 6 lakhs? Previous month also will be returned now, na? Now whether TCS applicable or not applicable? Not applicable, because TCS is negative. You understood? So if this number is negative, should we pay TCS or we are not required to pay TCS? We are not required to pay TCS. Net value of taxable supplies, that is aggregate value of supply of goods or services other than notified service, minus taxable supplies returned by the supplier. That should be taken as the net value of taxable supplies. While doing the TCS, should GST be included or not? No. Here itself I told you, we are computing TCS on 10,000 or 12,800? 10,000. And any sales returns made during the period should be deducted. What is the return that they are required to file? TCS return. GSTR 8. See the next point. GSTR 7 is TDS return. GSTR 8 is TCS return. By when the TCS return should be filed? 10th of the month following every month. Which means they need to pay TCS also by 10th of the month following every month. So what is the due date of payment of TCS? 10th of the month following every month means they need to pay TCS on a monthly basis. 10th of the month following every month, and the return is GSTR 8 to be furnished by 10th of the month following every month along with payment of TCS. So TCS is payable monthly or quarterly? Monthly. Details furnished by e-commerce operator in GSTR 8 should be matched with corresponding details furnished by supplier in GSTR 1. Only then TCS shall be made available as credit to supplier in GSTR 2A. What does it mean, pa? Carefully listen. I am e-commerce operator. You are my supplier. Whenever you make supplies through my platform, you will be reporting those outward supply. For you it is outward supply, na? You will report the details of that outward supply in your GSTR 1 as sale through my platform. Whenever I file the TCS return, I will mention on your behalf I am remitting the TCS. So whatever turnover that you mention and whatever turnover that I mention in my GSTR 8, these two should be matching. Is it clear? Suppose you mention a turnover of 8 lakhs, I mention the TCS turnover of 10 lakhs, then you will not get the TCS credit. Why you will not get the TCS credit? Because you are doing under reporting. Understood? That is this cross verification. Details furnished by e-commerce operator in GSTR 8 should be matched with corresponding details furnished by supplier in GSTR 1. This TCS credit will be reflected in supplier 1 return is there, that is GSTR 2A. But this is not that important point because returns, that much details will not be tested in exam at intermediate level, so don't worry. Then look into fifth point. E-commerce operator liable to deduct TCS is compulsorily required to get registered under section 24. This already we discussed now. Now, see the peculiar situation here. No need to make, not just listen. That is, supplier Tamil Nadu, recipient also Tamil Nadu, supplier Tamil Nadu, recipient also Tamil Nadu, e-commerce operator in Karnataka. Okay. Now, whether it is intrastate or interstate, please respond here. Intrastate. Intrastate means what is the GST that we have? CGST and Tamil Nadu SGST. But where is the e-commerce operator located? Karnataka. Now, how can they remit 0.5% towards CGST and 0.5% towards Tamil Nadu SGST? Tamil Nadu SGST they cannot remit na. So, the e-commerce operator should also register in Tamil Nadu. Is it clear? The e-commerce operator should also register in Tamil Nadu. Why they need to register in Tamil Nadu? Because then only they can deduct 0.5% towards Tamil Nadu SGST, which means, sir, e-commerce operator should register in every state. Yes. Yes, e-commerce operator should register in every state. Sir, how can they register, sir? Should they take the place on rent? No, not required. In the portal, whenever we make application for registration, say this, in the portal, whenever we go for registration, so we need to select the state where we want to get registered. Now, e-commerce operator is registering. Select the state. Tax collector, e-commerce, state. That state, say for example, I am in Karnataka. I want to register in Tamil Nadu. Yes, I can select Tamil Nadu. So, state selected in part A will be the state where you wish to register. So, you wish to register Tamil Nadu. I will give my details. Click on proceed. But I have to give my address proof. That address proof I will give Karnataka, which means the state that I am selecting in part A and the state I am giving as address proof in part B need not be the same state, which means e-commerce operator can register in every state and they don't need any address in that state. You got it? So, see this. They should register in each state where their suppliers are created. In such case, REG1. REG1 is the application for registration. Part A, they will submit the state where they apply for registration. And in part B, their physical place of business. Please see the example. I have given that. Flipkart having physical place of business in Karnataka can register in Tamil Nadu by showing Tamil Nadu in part A of registration application and showing Karnataka address in part B of registration application. If at all you are getting an e-commerce operator as a client, no, life settled. Because e-commerce operators will have registration in almost every state. Means that many returns they need to file. What are the returns to be filed by an e-commerce operator? GSTR 8 for TCS. But they should pay GST on commission. So they should also file GSTR 1 and GSTR 3B. You understood or not? So GSTR 1 for 12 months. GSTR 3B for 12 months and GSTR 8 for 12 months. 3 returns. Now, they are required to file 2 annual returns. GSTR 9 regular annual return. GSTR 9B annual return as a e-commerce operator for TCS. So, 2 annual returns. For one registration itself, you see how many returns? 12 into 3, 30, 12 into 3, 36 plus 2 annual returns. Okay. So, 36 plus 2, 38 returns for one registration. If they get 10 registrations also, that is 380 returns in a year. For one return, if we are charging somewhere like 5,000 rupees from one client itself, 19 lakhs is the revenue. You understood or not? So therefore, the moment you clear CA, your first objective is to get a e-commerce operator as the client. You understood? And that many returns they are required to file PA. So you just write down here returns to be filed by e-commerce operator. GSTR1 and GSTR3B for their outward supplies. What is their outward supplies? Commission, etc. Or their own goods also they can supply through their platform. Na? Example, Amazon basics like that, their own product also they will sell through their platform. Then GSTR 8. What is GSTR 8? TCS return. For TCS deducted. GSTR 9 regular annual return. GSTR 9B annual return as e-commerce operator. So this is with respect to each registration. With respect to each registration, what are the returns to be filed by e-commerce operator? GSTR1 and GSTR3B for their outward supplies, GSTR8 for TCS deducted, GSTR9 regular annual return, and 9B annual return as an e-commerce operator. Clear here? Now see the next page. So these are the key points that you need to remember. TCS, who is the person liable to collect tax at source? E-commerce operator. What is the threshold limit? Do they have any threshold limit? No. And rate of collection. What is the rate of collection? 1%. So CGST, SGST you divide, or IGST. What is the value for collection of tax at source? Net value of taxable supply. What is the due date of payment of TCS to government? 10th of the month following every month. Now look into this illustration. XYZ Limited, a registered supplier of goods, is effecting interstate supplies through E-Com Limited, an e-commerce operator. It has made taxable supply of goods amounting to 25 lakhs in the month of December 2018 through E-Com Limited. E-Com Limited has returned goods amounting to 2,50,000 to XYZ Limited during the month of December. Determine the amount of tax to be collected at source by E-Com. What is the value of supplies made through their platform? 25 lakhs. What is the sales returns? 2,50,000. So 25 lakhs minus 2,50,000, 22,50,000, and it is given as interstate supplies. So therefore it will be 1%. So amount of TCS 1% towards IGST, that is 22,500. Is it clear? Next. Can this GSTR 8 be rectified? Yes. By mistake, we mentioned some details in GSTR 8. Can we rectify it in the subsequent return? Yes. So we have to rectify it by 30th November of the succeeding financial year or date of filing and return, whichever is earlier. Remember, across GST, in 5 places, this time limit is common. In 5 places, this time limit is common. Time limit for availment of ITC, time limit for taking the credit, time limit for issuing the credit note. So we have to give credit note whenever we are reducing the invoice value, na, that time limit. And time limit for rectification of GSTR 1, time limit for rectification of GSTR 3B, and time limit for rectification of GSTR 8. In all these 5 cases, the time limit is common. What is the time limit? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. So, you can make note of this in page 198. In page 198, kindly make note of this. In the following cases, time limit is 30th November of succeeding financial year, 30th November of succeeding financial year, or date of filing annual return, whichever is earlier. Due date of filing annual return, actual date of filing annual return, actual date, not due date, actual date of filing annual return, whichever is earlier. 30th November of succeeding financial year or date of filing annual return, whichever is earlier. What are those cases? Number 1, time limit for first case, for availment of ITC, for availment of ITC. Number 2, for issuance of credit note. Then for rectification of GSTR 1. What is GSTR 1? Return that contains the details of outward supplies. All my outward supply details I will be showing in GSTR 1. Number 4, for rectification of GSTR 3B. What is GSTR 3B? It's a summary return that contains the details of all transactions. Okay, input tax credit, output tax, how much GST I need to pay, everything. And number 5, for rectification of GSTR 8, that is TCS return. These are the 5 cases where the time limit is same, 30th November of succeeding financial year or date of filing annual return, whichever is earlier. Done? So that is this. Time limit for rectification of TCS return. And TCS deductor is required to file an annual return in form GSTR 9B. By when? 31st December of the succeeding financial year. What you are copying? Make note. If you have finished making note of this, there is one illustration in page 196, illustration 4. Have a look into that illustration 4. Done? See this illustration number 4. Ecom Limited, e-commerce operator, has made the following supplies during December 2018. Supply of goods taxable, condition satisfied, taxable at 12% by registered supplier. Another condition also satisfied, that the supplier is registered. 5 lakhs and returns is 50,000. And in this case, should we reduce this 50,000 from 5 lakhs or not? Yes. Then next, second, supply of goods taxable at nil rate by registered supplier. TCS applicable or not applicable? Not applicable, because the supplies are nil rate. So TCS will not be applicable. Supply of housekeeping services by unregistered supplier. TCS applicable or not applicable? Why not applicable? Housekeeping services by unregistered supplier means 9(5) will get attracted. So TCS is not applicable. Supply of other services by registered supplier. TCS is applicable. So 5 lakhs minus 50,000 plus 1,50,000. How much? 6 lakhs. On that 6 lakhs, TCS will be computed at the rate of 1%. You understood, pa? Now, determine the amount of tax to be collected at source by Ecom Limited, that is 6 lakhs into 1%, 6,000. Now see the another part. What is the due date by which this 6,000 should be remitted to government? 10th of the month following every month. This is which month? December 2018. For December 2018, by when they should remit? 10th January 2019. Correct? Now, when they have remitted? 15 January. Determine the consequences if the said amount is paid and return is filed on 15 January. How many days delay? 5 days. First, for 5 days delay, they need to pay interest. On what? 6,000. 6,000 into, what is the rate of interest payable to government? 18% into, how many days delay? 5 days delay. So 5 divided by 365, that will be, round off to nearest to 1 rupee, 15 rupees is the interest payable. Is it clear, pa? So tell me interest provision. Tell me interest provision. For delay in payment of TCS, interest is payable at the rate of 18% from the due date till the actual date. So don't count the due date. From the next date you should count, okay? From the due date till the actual date, the difference, that is 5 days, we need to pay the interest. Plus, as there is a delay in filing return, we need to pay a late fee also. How much is the late fee for TCS return? 100 rupees per day, subject to maximum 5,000. That is the late fee. So how many days delay? 5 days. 5 days into 100. 500. But this is under CGST. The same amount of late fee we need to pay under SGST also. Is it clear? So therefore, 1,000 rupees will be taken as the late fee. Then sir, interest also you pay CGST, SGST. No. When you take 18%, that 18% is on total. So on 6,000 you are taking, so that is okay. But when you pay late fee, that is per day. So you have to compute 100 rupees per day under CGST, 100 rupees per day under SGST. But maximum is 5,000. Here it is only 1,000. Understood? So tell me, these two provisions will take break. For delay in payment of TCS, what is the interest? 18% per annum from due date till the actual date. What is the due date? 10th of the month following every month. Then for late fee, what is the late fee payable? 100 rupees per day, subject to maximum 5,000 under each act. Okay. We'll take a break for 15 minutes and then we will continue. But drink some good coffee or tea and come back, okay? Because next session you should be more energetic, please. Okay, we'll start. Have a look into TDS versus TCS, which is in page number 193. TDS versus TCS, see that. So already we have seen so far TCS. Let's compare it with TDS and try to understand. First, applicable section for TDS is section 51. For TCS it is section 52. To whom TCS is applicable? To an e-commerce operator. To whom TDS is applicable? Whenever we are making supplies to some notified recipients, that notified recipient, while remitting the money to us, they will be deducting a TDS at the rate of 2%. Who is that notified recipient? You can see that. First, when applicable. When TDS is applicable, supplies are made to notified recipient. When TCS is applicable, supplies are made through e-commerce operator. Who is liable to deduct and pay? TDS. Who is liable to deduct and pay? Notified recipient. Who is that notified recipient? Government or local authority. So central government, state government, local authority, remember government. Board or authority in which government has invested greater than 51%. Or society established by central government, state government, local authority and PSUs. These people are the notified recipients. Again, I am repeating, carefully listen. I am making supply of goods or services to the notified recipients. Whenever they are remitting the money to me, they will be deducting 2% towards the TDS. Again, what is the objective behind this TDS? Same objective of TCS only. So TCS deducted by e-commerce operator remitted to government. So government will come to know what is the turnover of the supplier. Same way TDS also. Whenever I am making supplies to the notified recipients, that notified recipients will deduct 2%. So which means government will come to know what is the turnover of the supplier. You understood? So mainly to identify the turnover of the supplier, they created this concept of TDS and TCS. TCS applicable whenever I am making supplies through e-commerce operator. Don't get confused between income tax TDS TCS versus this TDS TCS. That's a different story, this is a different story. So here what happens is that I am making supplies to some notified recipients. Who are those notified recipients? Government, local, that is government includes local authority. So government, then board or authority in which government has invested greater than or equals to 51%, and society, and finally we have PSUs. So in this case they will be deducting 2% towards the TDS. Whereas whenever I am making supply through e-commerce operator, they will deduct 1% towards the TCS. And what is the rate? TDS rate is 2% if it is interstate, intrastate 1% CGST, 1% SGST. But if it is TCS, interstate 1%, intrastate 0.5, 0.5. On what it should be computed? Value of supply, that is the amount remitted. Whereas here, and here we need to exclude GST. Whereas TCS is computed on what? Value of supply through e-commerce operator minus sales returns. Both TDS and TCS, the due date is same. 10th of the month following every month, they need to remit that. And is there any threshold limit for non-applicability? Yes. That is, in case of TDS, if the value of supply under the contract does not exceed 2,50,000, TDS is not applicable. What is it we need to see? Invoice value or value of supply under the contract? Value of supply under the contract does not exceed 2,50,000, TDS not applicable. What if the value of supply under the contract exceed 2,50,000? TDS is applicable on the entire amount. Entire amount means full amount that is remitted. And remember, while determining whether the TDS is applicable or not, we see the contract value. But while computing the TDS, we see on the amount remitted. Is it clear? Example, I enter into contract with government and that contract is for a period of 6 months. Over the 6 months, I need to make supplies worth rupees 5 lakhs. So what is the value of supply under the contract? 5 lakhs, which is more than 2,50,000. So TDS is applicable or not? Applicable. Now, how much money the government is remitting me? Not entire 5 lakhs. First case, first month they will be giving me 60,000. Now TDS is computed only on 60,000. Second month they are giving me 80,000. So on that 80,000 they will be computing the TDS. Are you understanding this? While determining whether TDS is applicable or not, we see the total value of supply under the contract. Once the TDS is applicable, the TDS will be computed on the amount remitted. Okay. Then, when these provisions are not applicable, if the supplier is unregistered, then TDS is not applicable. Same point for TCS also. Then, if the location of supplier and place of supply in the same state, but the deductor is in the other state. Let's try to understand this with this example. There is an architect who is located in Mumbai, Maharashtra. There is an architect who is located in Mumbai, Maharashtra. This architect is providing services to state government of Orissa. The architect who is in Mumbai, Maharashtra, providing services to state government of Orissa in relation to the property in Pune, Maharashtra. Can the government of Orissa have a property in Pune, Maharashtra? Yes, why not? They can have. Any government can have property anywhere. There is no restriction. We can have. So, lot of the cases, government will have properties in the other states as guest houses, so that whenever the officials are going to the other state for official work, those officials will stay in those guest houses. So, it is a normal thing. Even lot of states have the guest houses in Andhra Pradesh, mainly in Tirumala, so that whenever they are sending their officials, so for the pilgrim visit, so at that time, so that guest house will be used. Tamil Nadu government is also having a guest house in Andhra, and Andhra government is also having a guest house in Tamil Nadu. This is something which is normal, okay. So, state government of Orissa is having a property in Pune, Maharashtra, and for this architect services, what is the location of supplier, what is the location of recipient, and what is the place of supply? You understood the question first? So, there is an architect. Where is the architect located? Mumbai, Maharashtra, providing architect service to state government of Orissa, and this architect service is in relation to the property. That property is in Pune, Maharashtra. What is the location of supplier? Mumbai, Maharashtra. What is the location of recipient? Orissa. And what is the place of supply? Pune, Maharashtra. Now, what is the nature of supply? What is the nature of supply? Intrastate or interstate? Intrastate. Then, what is the GST that is applicable? CGST and Maharashtra SGST, correct? Now, where the recipient is located? Orissa. So, means they need to pay 1% towards CGST as TDS and 1% towards Maharashtra SGST as TDS. But the problem is, Orissa government, how they can pay towards Maharashtra SGST? They cannot pay. Due to that reason, what they are telling is that TDS is not applicable. Same point for e-commerce operator, we made the TCS applicable to them and we forced them to do registration. But government, so we cannot force them. You understood? E-commerce operator means business person, so we can force them. Government, we cannot force them to take registration. So that's why section itself is not applicable for them. Okay, TDS is not applicable. So tell me when TDS is not applicable, come on. If it is a intra or inter? Intrastate. But where the recipient is located? Another state. It is an intrastate supply, but the recipient is in another state. So TDS is not applicable. What if they are registered in this state? What if state government of Orissa is registered in Maharashtra? TDS is applicable or not? Applicable. TDS is applicable. Only problem is when the recipient is in a different state, but it is an intrastate supply. What if it is interstate supply? And why will government of Orissa be registered in Maharashtra? They will not be registered. I am just giving you what if, okay, but they will definitely not be registered. Then next, what if it is interstate supply? For example, the property is not in Pune, Maharashtra, the property is in Orissa. Now, what will be the location of supplier? Maharashtra. Location of recipient? Orissa. And what is the place of supply? So why we are taking place of supply as location of property? Because any service in relation to immobile property, the place of supply will be location of the property. Is it clear? Any service in relation to immobile property, what will be taken as a place of supply? Location of the property. So where is the property now located? Orissa. Now what is the nature of supply? Interstate. Now what is the GST that is applicable? IGST. Can the recipient in Orissa deduct 2% TDS towards IGST? Yes. 2% TDS towards IGST will be applicable. Why TDS is applicable in this case? IGST no issue. TDS will be definitely be applicable. So you need to remember when TDS is not applicable, if it is an intra-state supply and the recipient is in the other state. Now this is usually a question that can be asked guaranteed in exam, because in final level also they have asked this, because this chapter was at final level, then they brought it to inter. What are the cases where TCS is not applicable, or what are the cases where TDS is not applicable? Somewhere you please make note of this, okay. So situations where TCS is not applicable, you know na? What? Supplier is unregistered. Section 95, like that, okay. So write down. Following are the situations. Somewhere in your notebook you write down. Following are the situations where TCS under section 52, following are the situations where TCS under section 52 is not applicable. Following are the situations under section 52 where TCS under section 52 is not applicable. Number 1, supplier is unregistered. Supplier is unregistered. Number 2, supplies are exempted or non-taxable. Supplies are exempted or non-taxable. Next, number 3, supply covered under section 9 subsection 5. Supply covered under section 9 subsection 5. Next, payment not collected by e-commerce operator. Payment not collected by e-commerce operator. Some more case also I will tell you here. Supply covered under RCM. Supply covered under RCM. In case of supply covered under RCM, who will pay GST? Recipient. So TCS not applicable. You understood? Supply covered under RCM. Next point, sales returns. Sales returns. On sales returns also TCS not applicable, correct? Sales returns. Okay. These are some cases where TCS is not applicable. Depending upon the marks you write. Suppose if the question is for 4 marks, 4 points if you write enough. If the question is for 5 marks, you try to write the extra points also. Next, same way, when TDS is not applicable, write down next line. In the following cases, TDS under section 51, in the following cases, TDS under section 51 is not applicable. Is not applicable. First point same pa. Supplier is unregistered. See, when supplier is unregistered, basically they will not be able to take TDS credit na. That's why when supplier is unregistered, TDS is not applicable. Supplier is unregistered. Second point, same. Supplies are exempted or non-taxable. Then also we don't have to bother about the turnover of supplier. So therefore TDS is not applicable. Supplies are exempted or non-taxable. Next, when the supply is covered under RCM, the liability is on recipient. So we don't have to bother about supplier. So TDS not applicable. Next point, supply is covered under RCM. Third point. First point, supplier is unregistered. Second point, supplies are exempted or non-taxable. Third point, supply covered under RCM. Next, value of supply under the contract. Value of supply under the contract less than or equals to 2,50,000 excluding GST. Value of supply under the contract means total value of supply under the contract less than or equals to 2,50,000. The 2,50,000 is including GST or excluding GST? Excluding GST. Because we have a threshold limit now for TDS. Then one more point we discussed just now. It is an intra-state supply. Write down. It is an intra-state supply. It is an intra-state supply, but recipient is in another state. It is an intra-state supply, but recipient is in another state. Next point, supply to other than notified recipient. Correct? Sir, whenever the supply is made to notified recipient, then only TDS is applicable. What if the recipient is other than notified recipient? Then also TDS not applicable. Supply to other than notified recipients. Who are the notified recipients for TDS? Government, PSU, board or authority where government has invested greater than or equals to 50%, 51%, and then society. Correct? So, supply to other than notified recipient. Next one, next point. Supplies between notified recipients. Means a PSU providing services or goods to government, no TDS. Government, one government providing goods or service to another government. First of all, supply is exempted. You understood here? So TDS will not be there. And suppose if a body is providing services to government, then also there won't be any TDS. Supplies between notified recipients. You understand that? Supplies between notified recipients. How many points for TDS? Okay. So these points you need to write whenever you get a question on when TDS is not applicable. You understood all those cases, pa? Then, what is the return to be filed by TDS operator? TDS deductor, what is the return? GSTR 7. By when they need to file? 10th of the month following every month. What is the return to be filed by TCS deductor? GSTR 8. By when? 10th of the month following every month. Whether TDS deductor is required to file any annual return? No. No annual return for TDS deductor. But for TCS deductor, there is an annual return, that is GSTR 9B. But TDS deductor is to just give a certificate as to how much TDS they have deducted. A certificate has to be given, but there is no annual return concept for TDS deductor. What is the position of the amount deducted? The TDS TCS deducted by recipient and the e-commerce operator will be reflected where? In the supplier's electronic cash ledger, not credit ledger, electronic cash ledger, which means that can be used for payment of taxes, interest, penalty, anything. Got it? So your e-commerce operator, you are remitting TCS na, that will come in my electronic cash ledger. You are my notified recipient, you will deduct TDS and remit, that will come in my electronic cash ledger. What I can do with that? I can use it for payment of my tax liability, interest, penalty, fee and others. Usually liabilities of a registered person will be TIPFO, TIPFO, T for tax, I for interest. Why interest? On account of delay in payment of tax. P, penalty. F, fee, that is late fee. Always remember, late fee will be payable under CGST, SGST only. We don't have to pay late fee under IGST. Got it? Then next, O for others, any other amount. So what are the 5 dues of a person, registered person? T, I, P, F, O. T for I, P, F, O for others. So now I can use this balance in the cash ledger for payment of my any liability. TDS, TCS deducted shall be paid by the deductor and it shall be reflected in the GSTR 2A, which can be used by the supplier for payment of GST liability of supplier. Such amount can be used even for payment of interest, penalty or late fee payable by the supplier. Now look into this illustration 2 related to TDS. State whether TDS is applicable for following situations where supplies are made to notified recipients. Finance department is making a payment of 3 lakh to a supplier of printing and stationery. Finance department means government. Government is making payment of 3 lakh to a supplier of printing and stationery. So whether TDS is applicable or not applicable. What is the value of supply under the contract? 3 lakhs means it is more than 2,50,000. So TDS is applicable or not applicable? Applicable. Education department is making a payment of 5 lakh to a supplier of printed books and printed or illustrated postcards, where payment for books is 2 lakhs and 3 lakhs is for other printed and illustrated postcards. For your information, books are exempted right there. Books are exempted. Now tell me whether TDS is applicable or not applicable. Applicable, because we need to see only taxable supplies. What is the taxable supplies? 3 lakhs. Books is exempted part, don't bother about books. Taxable supply is 3 lakhs. Whether it exceeds 2,50,000 or not, yes. So TDS is applicable. Then finance department is making payment of 1.5 lakhs to supplier of car rental service. TDS is applicable or not applicable? Why not applicable? Does not exceed 2,50,000 due to that reason. Health department executed a contract with local supplier to supply medical grade oxygen of 2.6 lakhs including GST 12% and is making full payment. Now while determining the value of supply under the contract, we need to include GST or exclude GST? Exclude GST. Exclude GST and check. 2,60,000 into 100 divided by 112. How much? 2,32,142, which exceeds 2,50,000 or does not exceed 2,50,000? Does not exceed 2,50,000. So TDS is not applicable. Last case. Municipal Corporation of Kolkata purchased a heavy generator from a supplier in Delhi. Now it is making a payment of 5 lakh and IGST at 18% on 5 lakhs. So whether the value exceeds 2,50,000? Yes. And all these cases, it is not intra-state and the recipient is in a different state. Fifth point, you see, Kolkata purchased a heavy generator from supplier in Delhi. Means it is a interstate supply. It's not an intra-state supply. So due to that reason, TDS will be applicable, no issue. You got it here? Then look into this. Applicability of TDS, 3 situations. Supplier, place of supply and recipient. Everyone is in the same state. What is the nature of supply? Intrastate supply. TDS applicable or not applicable? Applicable. So CGST, SGST to be deducted. Supplier and place of supply, different states. What is the nature of supply? Interstate. TDS is applicable? Yes. TDS to be deducted. Supplier and place of supply, same state, but the recipient is in the different state. TDS is applicable or not applicable? Not applicable because it is an intrastate supply. but the recipient is located in the other state. For these three situations, I gave an example. Like this, you can expect an illustration exam. Actually speaking, May 24 was the first attempt where they have brought in TDS TCS, and they did not test much on TDS TCS for exam purpose. That's why they can make a question like this. These are all probable questions. These kind of questions can be expected. Okay, see there. Situation, in all these cases, the taxable value exceeds 2,50,000. We need to know location of supplier, place of supply, and state of registration of the recipient. Based on that, you need to determine type of supply, tax, and TDS. Now, don't see your book for some time. Let's analyze this here. Look into the screen. First situation, Government of West Bengal purchased taxable goods from a supplier within the state. Now, in this case, what is the location of supplier? West Bengal. What is the location of recipient? West Bengal. Generally, in case of goods, ending point of the goods will be taken as the place of supply. What is the ending point of the goods? West Bengal. Therefore, it is what type of supply? Intrastate supply. Is the recipient in the same state? TDS applicable or not applicable? Applicable. That is 1% CGST and 1% SGST. Agreed? Now, like that, you see the second one. Government of Punjab purchases taxable goods from a supplier in Delhi. Location of supplier? Delhi. Location of recipient? Punjab. Place of supply is ending point. Punjab. Nature of supply? Interstate. Type of GST? TDS applicable or not applicable? Applicable. So, recipient has to deduct 2% towards IGST. Then, third case. Government of West Bengal engages a contractor of Delhi for renovation of their building in Delhi. Location of supplier? Delhi. Location of recipient? West Bengal. Place of supply is location of property. What is the location of property? Delhi. Is it intrastate or interstate? Intrastate. Supplier also Delhi, place of supply also Delhi, intrastate. Type of GST? CGST, SGST. No IGST, CGST, SGST. Whether the recipient in the same state or different state. So, TDS is applicable or not applicable? You understood, pa? Then, what are the consequences of not complying with TDS TCS provisions? Whether you have to pay TDS or TCS but not paid, interest will come. What is the rate of interest? 18%. From when it should be computed? From the due date till the actual date of payment. Okay, this is a common point for TDS TCS. TDS TCS not deducted or deducted but not paid to government. In both the cases, interest will be at the rate of 18% from the due date till the date of payment. Then you have to also pay the late fee. What is the late fee for TCS? TCS already discussed. 100 rupees per day subject to maximum 5,000 under each act. For TDS, it is 25 rupees per day subject to maximum 1,000. Why you know? Government. E-commerce operator is private. Let them pay higher late fee. Government and all, how can you ask to pay that much late fee? So, only 25 rupees per day subject to maximum 1,000. So, 25 per day subject to maximum 1,000 under each act, but here 100 rupees per day subject to maximum 5,000. Clear here? Then look into illustration 5. Messrs. Raj Apparels is registered under GST in the state of Rajasthan. It sells leather handbags across India through e-commerce operator Y-Cart. Y-Cart is registered with Madhya Pradesh GST authority as TCS collector and collects TCS on supplies made through it. For the month of February, actually question starts from here. For the month of February, Raj Apparels made an interstate supply of 4,60,000, supplies amounting to 84,000 were returned in the same month. Outward supplies are exclusive of tax, where sales return is inclusive of tax. Now tell me how much is the TCS? What you will do? Don't blindly deduct 4,60,000 minus 84, because 4,60,000 is exclusive of GST, but 84 is inclusive of GST. So take out the GST. What is GST if you take out 84,000 into 100 divided by 112? How much? 75,000. So from 4,60,000 you need to reduce 75,000. What is the balance? 3,85,000, and on that 1% 0.5, 1%. Why 1%? Clearly it is given as interstate supplies. Okay. So apparels is making interstate supplies. So 1% 3,850. Is it clear? Then next we have some special aspects here, that is clarification on TCS liability in case of multiple e-commerce operator in one transaction. What if there are multiple e-commerce operators in one transaction? First of all, why such a situation will arise? So there will be two e-commerce operator, one will be seller side e-commerce operator, another person will be buyer side e-commerce operator. Okay. So if you have some space, you can make note over there, otherwise you can write in your notebook. Say Mr. X, Mr. Y, Mr. Z are the sellers who listed their products through e-commerce operator 1. Say example Meesho. So e-commerce operator 1, they have listed their products. Mr. X, Mr. Y and Mr. Z are sellers. They are sellers, and what they did is that they listed the products through Meesho. The advantage for them is that Meesho will be listing even unregistered persons also. Why they will register unregistered person, list the unregistered persons also? Because Meesho is growing e-commerce operator. As they are a budding e-commerce operator, they will list every kind of supplier, whether you are registered or unregistered. And when you go to Amazon, Amazon puts a condition, you should be registered. Otherwise, we will not list in our platform. The default, it will ask us to give our GSTIN. And that too, we should have a decent turnover. Otherwise, they will not allow us to register. Means sole proprietors and all, they will not encourage. So they will be encouraging only partnership firms, companies, etc. and all. Due to that reason, these people have listed through Meesho. But Meesho is not having that much of presence across the country, because every time when we need to buy a product, we either visit Amazon or we visit Flipkart. Only those people who know, okay, this kind of website is there or this kind of app is there, people will be visiting. So then, in order to push this sales, what Meesho will do, they will list it through Amazon. That is e-commerce operator 2. E-commerce operator 2, example Amazon. You got it here? Now, why Amazon will agree for listing by Meesho? Because Meesho is a bigger seller, correct? Meesho is now a bigger seller. How Meesho is a bigger seller? Because they are making sales of multiple people. So Amazon will definitely agree to list it. So Amazon will agree to list a seller, or another e-commerce operator also can list. Now, these goods are sold to various buyers. Mr. A, Mr. B, Mr. C. So this Mr. A, B and C are buyers. You understood here up to this? Now these buyers will make payment to Amazon. will make payment to Amazon. Now Amazon will remit the money to Meesho, and Meesho will make the payment to sellers. Correct pa? Now what will be deducted by Amazon for making payment to Meesho? Commission. Very good. Commission plus GST on commission. Commission and GST on commission. Whether Amazon deducts any TCS is the question pa here. No. Read it carefully. When multiple e-commerce, why you said no? Why it is no? Here for Amazon, who is the supplier? Meesho. And here XYZ are registered. XYZ are registered. I gave you an example of why there will be multiple e-commerce operators. In my example, XYZ are registered. But why there is a concept of two e-commerce operators, I told you. Usually some unregistered people also will be listing for that purpose. Okay. Now, who will be deducting TCS? Read that and tell me. There are two lines na, you read that and tell me. Who will be deducting TCS? Final e-commerce operator means which side e-commerce operator? Meesho. Seller side e-commerce operator. So Amazon will not deduct any TCS. But Meesho, while remitting money, they will deduct commission and GST on commission. Commission and GST on commission. Even they will also deduct TCS at the rate of 1%. You understood pa? So, which e-commerce operator will deduct TCS when multiple e-commerce operators are there? Seller side e-commerce operator, the final e-commerce operator who deducts. So, final means again, which side final? From seller side, if you see, this way you see, Amazon is final actually. Seller to buyer, if you see, Amazon is the final. And buyer to seller, if you see, Meesho is the final. That's why better remember seller's side e-commerce operator. You understood? Seller's side one e-commerce operator is there na? That e-commerce operator only will deduct TCS. Finished here, make note of this. Understood or not? And this is actually an amendment, not tested in exam, chance is there. Such e-commerce operator who finally releases the payment to supplier is liable to deduct TCS. Each e-commerce operator is required to pay GST on the commission earned by them. Then, additional points or special procedures. See the second chart. The second chart already we discussed. I am a supplier who is unregistered. I want to supply goods through e-commerce operator. Possible or not possible? Possible. But one condition is there. What is that condition? That supplier should not make interstate supplies. Okay? See your book here. So, supplier who is making supply of goods through e-commerce operator, even though they are unregistered, they can make supply of goods through e-commerce operator. But what is the condition? That supplier should not make interstate supplies. Now, whether TCS is applicable or not applicable. In that situation, TCS is applicable or not applicable? Why not applicable? Because the supplier is unregistered. And so what are the conditions to be complied with by the e-commerce operator? Please see your book. What are the conditions to be complied by e-commerce operator? First, allow supply of goods only after allotment of unique enrollment number. There is something called as enrollment number. Who should obtain the enrollment number? Supplier. Why supplier should obtain an enrollment number? Are they registered or unregistered? Unregistered. Means they don't have a GSTIN. But some identification number they should have, na? That's why they need to get an enrollment number. Number 2, should not permit supplier to make interstate supplies. Why? Suppose if they make interstate supplies, they are compulsorily required to get registered now. Who is compulsorily required to get registered? Supplier. So therefore, e-commerce operator should ensure that the supplier is not making interstate supplies. Okay. Then next, so not required to deduct TCS. Why not required to deduct TCS? Because the supplier is unregistered. Whether the e-commerce operator is required to file GSTR 8 and show these supplies in the GSTR 8, yes, as non-TCS supplies. Even though there are some supplies on which TCS is not there, those details should be reported by the e-commerce operator as non-TCS supplies. Is it clear? So what are the 4 compliances to be followed by e-commerce operator when the supplier is unregistered? Respond, please. Very, very important. Theory question they can ask. What are the compliances to be followed by e-commerce operator if the supplier is unregistered? Number 1. So ensure that the supplier has obtained enrollment number. Number 2. Should not make the supplier make interstate supplies. Number 3, not deduct any TCS, but should report these details in GSTR 8. Clear? So allow supply of goods only after allotment of enrollment number, should not permit supplier to make interstate supplies, not required to deduct TCS, should declare the details in GSTR 8. And what are the compliances to be followed by the supplier? Unregistered and whose aggregate turnover not exceeds the threshold limit. However, they should obtain a enrollment number. And what about supplier making supply of services through e-commerce operator? Is this applicable? No. Because for supply of services through e-commerce operator, we don't have the condition. Any person can supply service through e-commerce operator, and when they need to register, only when their aggregate turnover exceeds threshold limit, they need to register. Okay. Then see the previous chart. See the previous chart. There is a supplier who is opting for composition scheme. Listen, there is a supplier. So supplier is opting for composition scheme. When the supplier is opting for composition scheme, sir, what is composition scheme? Composition scheme is a simplified scheme for payment of GST. Rather than paying GST at the regular rate, a person opting for composition scheme will pay GST at the reduced rates. Again, I am repeating, please concentrate. A person opting for composition scheme, rather than paying GST at the regular rate, they will pay GST at the reduced rates. One of the restriction for a person opting for composition scheme is that they should not supply services through e-commerce operator, but they can supply goods through e-commerce operator. Is it clear? They should not supply services through e-commerce operator. Who should not supply services through e-commerce operator? Person opting for composition scheme. But they can make supply of goods through e-commerce operator. However, they should not make interstate supplies. Why? A person opting for composition scheme, if they make interstate supplies, they will not be eligible for composition scheme. There are certain disqualifications for composition scheme. In that, one of the disqualification is that they should not make interstate supplies. Another disqualification is that they should not make supply of services through e-commerce operator. Now, I am a supplier. I want to supply goods through e-commerce operator. Can I do that? Yes. And I am under composition scheme. But condition is what? I should not make interstate supplies. Now, as a e-commerce operator, what are the compliances that you need to follow? Number 1, you should not permit me to make interstate supply through your platform. TCS applicable or not applicable? Applicable, because a person opting for composition scheme is also a registered person. So TCS will be applicable and should declare the details in GSTR 8. Understood, pa? So why I connected these 2 points? Because these two are similar. Both the cases, the e-commerce operator should not permit the supplier to make interstate supplies. You understood or not? However, in this case TCS applicable, in this case TCS not applicable. Why in the first case TCS applicable? Because the supplier is registered. Why in the second case TCS not applicable? Because the supplier is unregistered. And what is the extra point that we have in the second case? That they should allow the supplier only after obtaining a unique enrollment number. Okay. Then details of TCS furnished by e-commerce operator to be made available electronically only to registered suppliers. Of course, we know that, because if the supplier is unregistered, first of all TCS will not be deducted. So whatever TCS that is deducted should be made available to the supplier. How it will be made available to the supplier? Once we file GSTR 8, automatically our supplier will know that we have deducted the TCS. Got it? That's it, pa. We completed TDS and TCS. So look into accounts and records and GST practitioner. Two topics are there. Page number 16, sorry, page number 214, segment 16. Page number 214, page 214, segment 16. There are only two sections in this, section 35 and section 36. As per section 35, what are the accounts and records to be maintained by a registered person? And section 36 says what is the period for which accounts and records to be maintained. Now in the section list, you please update or draw the other sections that we have seen so far. So after section 7, 8, 9, we learnt 11 and write 51 and 52. What is 51 and 52? TDS, TCS. Please update. Section 51, TDS. Section 52, but these are under CGST Act. Okay, CGST Act. Section 51, TDS. Section 52, TCS. Then write section 35, accounts and records to be maintained. Section 35, accounts and records to be maintained. Section 36, period of maintenance of accounts and records. Section 35, accounts and records to be maintained. Section 36, period of maintenance of accounts and records. Period of maintenance of accounts and records. So look into section 35. Every registered person should maintain certain accounts and records. Sir, what are those accounts and records that they need to maintain? You remember this mnemonic I formats. I formats. I for inward supplies. F for foreign trade. O for outward supplies. So therefore don't write like this. Don't write like inward supply, outward supply, foreign trade. No, they will not understand anything. You have to clearly explain and write. So as per section 35, you will definitely get this question only if we are getting a question on accounts and records. Because what we have is only two sections. If at all they need to test, they will ask this short note question. What are the various accounts and records to be maintained by a registered person? So what you need to write is that as per section 35 of CGST Act, a registered person shall maintain the following accounts and records. In your mind you remember I formats. First, all accounts and records pertaining to inward supplies. Inward supplies you are making from whom? Suppliers. If it is your purchaser, one idiot is there na? Who is that idiot? supplier, along with details of suppliers with relevant documents. What are the relevant documents? Tax invoice, debit note and credit note. You understood? But this is what you need to remember, pa. But exam, if you write this 1 mark also you will not get, because these are the keywords. But in exam what you need to write is like auditing, like you have to elaborate and write. You understood? So half a page you should fill. Understood? For that you need to make a effort. Filling and all I don't have to tell you, because if you want to write you can write now, stories also you will be able to write, but too much story and all don't write. So confine. So what is the first point that you will write? All accounts and records pertaining to inward supplies along with supplier details with tax invoice, debit note and credit note. Okay. Then second point, all accounts and records pertaining to foreign trade, you remember in mind. What is foreign trade? Import or export. You understood? Along with the supporting documents, details of suppliers from whom we have imported, or details of customers to whom we have exported with supporting documents. Okay. The next number 3, all accounts and records pertaining to outward supplies along with details of customers if applicable. Why if applicable? It may be B2C also, na? Registered or unregistered, along with details of customers if applicable with tax invoice, debit notes and credit notes. Okay. Then next, I, F, O, R. R for RCM purchases. So out of the purchases, what are the purchases on which you have to pay GST under RCM? That also you need to maintain separately. So what you will write? Out of the accounts and records pertaining to inward supplies, those inward supplies on which GST payable under RCM should also be maintained. Okay. Then next, M for manufacture related. Manufacture related means production details. Production details. So all accounts and records pertaining to manufactured goods. So goods purchased, produced or manufactured. Then next, all accounts and records pertaining to advances. Advances received from whom? From supplier you will receive advance. From your customers. Paid suppliers. Adjusted against payable. You understood? Then T for tax details. What are the tax details means? Input tax, output tax. S for stock of goods, along with the details of the place where you are keeping that stock. So you just remember the core point and you add a little masala front and back and you write. Okay. So what are the details or accounts and records that we need to maintain? I for inward supplies. F foreign trade, that is import and export. O outward supplies. Then R RCM purchases. Then M manufacture related. A advances received, paid, adjusted. T tax details, input tax and output tax. Yes, stock of the goods. This is the key points. Now you add some extras to it. Okay. Now what are the accounts and records to be maintained by a person opting for composition scheme? Same story except TS. I pharma. Okay. I pharma. The TS not required. This tax details and stock details not required for a person opting for composition scheme. Understood here? There. Yes, sir. Ask. That is, they can have import. They will not have export, but they can have import na. So that is common. Foreign trade is common. Import or export. Okay. So they will not have export, but they will have import. Then also they need to maintain records related to import. Next, what is the period for which we need to maintain the accounts and records? Remember, 6 years you remember, 6 years. What is the period for which we need to maintain accounts and records? 6 years. But don't write 6 years, write it in months. 72 months, 72 months. From when? End of the financial year or due date of filing annual return? Due date of filing annual return. 72 months from the due date of filing annual return is the time limit for which we need to maintain accounts and records. For example, current year is 21-22. What is the due date of filing annual return for 21-22? 31st December 2022. From there, 6 years means 23, 24, 25, 26, 27, 28 till 31st December 2028. You need to maintain accounts and records. Is that clear? Suppose in a particular financial year you made an appeal. For a particular financial year you went on an appeal. Then you need to maintain accounts and records for 72 months from the due date of annual return or 1 year from the outcome of the appeal. Means you go for appeal to the court, court will give a decision. Whenever court gives decision, from there 1 year or 72 months, 6 years from the due date of annual return, whichever is earlier or whichever is later. Later. So which are all points, whichever is later, you separately write and keep somewhere, not now, later, because whichever is earlier you will remember, whichever is later you will get confused, okay. So this is a place where they have used the word whichever is later. Appeal cases later of 72 months from the due date of filing annual return or 1 year from the disposal of appeal proceedings. Look into the example. What will be your answer in the above case? If appeals against an order is filed on 28/12/2021 and appeal disposed of on 14/2/2027. Now, first A, what is the appeal date? Appeal disposed of, when the decision is given. Appeal means you go to the court, court will give a decision. When the decision is given by the court? 14 February 2027, good date they gave, plus 1 year, plus 1 year. What is plus 1 year? 14/2/2028 or 6 years from the due date of annual return. What is the due date of annual return? 31st December 2022 plus 6 years, 31st December 2028, whichever is later. Which is later? 31st December 2028. Up to that we need to maintain accounts and records. What if the case is disposed of on 14/2/2028? Then we need to maintain the accounts and records till 14/2/2029. Understood? So tell me these two provisions, mainly in MCQ. See, this will be for theory. If at all they are asking for theory, descriptive. This definitely for MCQ only. Okay. So tell me what is the time limit? Normal cases, 72 months from the due date of filing annual return. Appeal cases, 1 year from the outcome of appeal. Outcome of appeal, or 72 months from the due date of filing annual return, whichever is later. Up to that we need to maintain. Then there is one important point. Every transporter and warehouse keeper, even though their aggregate turnover does not exceed threshold limit, they need to mandatorily obtain one enrollment number, because lot of the cases evasion happens because of these two people only. Sir, I am a manufacturer, sir. This goods should enter into the black market. When these goods will enter into the black market, how it will enter into the black market? Only through a transporters and warehouse keepers, correct? If they both are acting properly, definitely there won't be illegal transactions that will happen. Agreed or not agreed? Yes or no, yaar? That's why what law says, every transporter and warehouse keeper, even though their aggregate turnover does not exceed threshold limit, they need to obtain a unique enrollment number and update their address with the portal, So GST officer anytime can come and verify the premises to know whether they are dealing with goods which are unaccounted or not. Understood? So see that every transporter and warehouse keeper, even though not registered, should obtain unique enrollment number from GST network and maintain some necessary records. Okay. Next, there is one issue related to sale of goods by way of auction. See this example. There is a principal who is a registered person who brings the tea, coffee, rubber, etc. to the auctioneer, and these goods are sold by way of auction. Now, where we need to maintain the accounts and records? Generally, we need to maintain accounts and records in our principal place of business relating to all place of business. But we need to maintain accounts and records in additional place of business also pertaining to that additional place of business. For example, I am having business in Chennai, which is my principal place of business. Chennai is my principal place of business. I am also having additional place of business in Madurai, Salem and Coimbatore. So these are my additional place of business. Now, I need to maintain accounts and records in Chennai pertaining to Chennai, Madurai and Salem, Coimbatore, or only Chennai related records we need to maintain? All. So in Chennai, we need to maintain all accounts and records. Records pertaining to all 4 places. But in Madurai, Salem and Coimbatore, we need to maintain records pertaining to respective place. Maintain records pertaining to respective place. Where is it given? You can see that in the first paragraph, section 35. Read it once. Under GST, every registered person is required to maintain correct account of the following details at the principal place of business and additional place of business relating to that place specified in the registration certificate. Okay. So, you write down this example. So, X Limited is having principal place of business in Chennai, principal place of business in Chennai and additional place of business in Madurai, Salem and Coimbatore. So, they need to maintain records pertaining to all 4 places in Chennai, but in Madurai, Salem and Coimbatore, they need to maintain records pertaining to respective place. Yes, sir. Mandatory, because section 35 uses the word shall, mandatory, it's not optional. But sir, you said something optional, that is separate registration. Whether they need to go for separate registration with respect to Madurai, Salem and Coimbatore, that is not required. I am talking about maintenance of accounts and records. If you go for separate registration, anyhow you need to maintain accounts and records there. I am not talking about separate registration. One registration only. In that one registration only, there will be, one GSTIN they will be having. But we need to show all our place of business. So, but we need to maintain records pertaining to all the place of business in our principal place and records pertaining to each and every additional place of business in that additional place. Now, connecting that to this point, you finish now, make note of this. Connecting that to this point of auction. So, a registered person will bring the goods to the auctioneer's place. For example, I am the registered person I am bringing tea, coffee, rubber, etc. to your place. You are my auctioneer. So usually certain agricultural goods and all sold only by way of auction, so that the fair price will be determined. So you are the auctioneer. What I will do, some 10 lorries of goods I will be bringing to your place, and you will ask all the buyers to come to your place and make a bidding. You know how auction will happen. So make a bidding, and the person who is making the highest bid, you will hand over the goods to that person. I will raise invoice to him. Correct or not? Now you are my auctioneer and you are an agent of mine. Your place is actually my additional place of business, because I am bringing the goods to your place now. Your place is my additional place of business. Now the question came before the GST department that should we maintain the accounts and records in the auctioneer's place, for which GST department is telling auctioneer place is a temporary place. Just for the sake of sale of goods we are doing it. So in auctioneer's place we don't have to maintain any accounts and records. That is exception to this point. Is it clear or not? Auctioneer's place is actually principal's additional place of business, but in that auctioneer's place accounts and records not required to be maintained. Okay, see this. The principal who is bringing tea, coffee, rubber to the auctioneer's place, and it will be sold by way of auction to the buyer, and these goods are temporarily deposited in a warehouse in the auctioneer's place, deposited till the time auction is completed. Now what they are telling, records not required to be maintained by principal or auctioneer, even though it is additional place of business. That's what CBSE circular. So it is like a relaxation or exception to the general rule that in every additional place of business we need to maintain accounts and records. Understood by this clarification? That's it. So this is what you need to know about accounts and records chapter. Where are you closing book? Wait. See the previous page, segment 15, GST Practitioner. There is a concept, GST Practitioner. Again, this is not much tested in exam. Maybe out of last 10 attempts, 1 or 2 attempts they have tested this. Okay, and in this you need to know only 2 questions. Number 1, who can become a GST practitioner? Number 2, what are the activities that can be performed by a GST practitioner? First we will see who can become a GST practitioner. So what is the need of GST practitioner? Little bit background I will give you. Lot of registered persons need to file their returns and need to pay taxes. They may not be well versed with the GST law. We ourselves not well versed with the GST law. Think about the traders, so they don't know anything about this GST. Then how can they file returns and pay the taxes? So definitely they need to go to the chartered accountants. But chartered accountants will be charging huge fees. So for 500 rupees, 1000 rupees and all, they will not do work, correct or not? They will be having a decent money that they expect. Definitely they will expect, because hours and hours they are sitting and reading and qualifying. So minimum to minimum they will expect. Agreed or not? So why we will not we will not expect, or we will expect, because of the hard work that we are putting, we will expect that. And then a normal trader cannot go to a chartered accountant because of the fees. So we need to create a separate person who will do certain regular activities like filing of return, payment of taxes, day-to-day activities in the GST. For that purpose they created this concept of GST practitioner. But who can become a GST practitioner? See the qualifications, eligibility criteria for becoming a GST practitioner. They should be Indian citizen, because foreign citizen don't have any other work now, they will come and become. Okay, so only Indian citizen. Next, person of sound mind. Okay, they should be able to understand everything. Sound mind is required. Not adjudged as insolvent. I don't know how it is connected to GST practitioner, because as if he is going to pay the taxes out of his pocket. So why not adjudged as insolvent, not adjudged as insolvent? Actually these are directed disqualifications, okay. Then not been convicted by a competent court for greater than 2 years means not imprisoned. Convicted means imprisoned, right there, imprisoned. Not imprisoned for more than 2 years. Sir, imprisoned up to 2 years, okay sir. Yes, we will give him a rehabilitation. Let him go to jail, come out, we will make him as a GST practitioner, okay. So, what are the eligibility criteria to become a GST practitioner here? Number 1, Indian citizen, sound mind, not adjudged as insolvent, not convicted for more than 2 years, up to 2 years, okay. Plus, they should be having any of the qualification. What is that qualification, sir? So 10th standard, okay? No. 10th standard, not okay, because of COVID, all pass happened, na? So that's reason. So therefore, they are not giving this 10th standard as a qualification. What is the qualification to become a GST practitioner? Degree. Degree is required. But which degree, sir? See there, graduate or postgraduate degree or its equivalent examination having a degree in commerce, law, banking, including higher auditing or business administration. So basically MBA, BCom, MCom, BBA, these people can become degree examination of any foreign university. Go to Stanford, Harvard, etc. and study there. Come, you will become GST practitioner. We will make you. Degree examination of any foreign university recognized by any Indian university. Any other examination notified by government on the recommendations of the council. Actually, all these three covered in the fourth point itself. See there. Any degree examination of Indian university or foreign university recognized by any Indian university. Can an engineer become GST practitioner? Can an engineer become GST practitioner? Actually, yes. Because degree examination, they did not tell anything. So, engineers are becoming many things, it's okay. Because as person who study engineering, really finding it difficult in today's industry, because every street they are opening up one engineering college, the unemployment is increasing for them. It's okay, let them come and do, no issue. They can also become any degree examination. But sir, they will not have the requisite knowledge about GST, na sir. That's why there is an exam called as GST Practitioner exam which will be conducted. So, you are having a degree in the related field. Related field means what? BCom, MCom, BBA, MBA. No need to write that exam. But any other degree like MA, BA or engineering, etc., they will be required to write one exam called as GST Practitioner exam. So that is what this any other examination notified by government on the recommendations of council, you write there GST Practitioners exam. But see the last point part, too much it is. He has passed the final examination of CA, CMA or CS, they can also become GST practitioner. Why we will qualify and become GST practitioner? Happily we will start practice. And see this. Suppose sir, there is a person long back completed 10th standard. Long back I mean some 30 years, 40 years before they completed 10th standard, joined in the tax department, because at that time 10th itself is a super qualification. Really, the standard at that time 10th was so high, and at that time 10th means they will be given a government job, and 30 years, 40 years before they joined in the government service. Now they have retired. Can they become GST practitioner? Qualification wise they don't have a degree, but they can become GST practitioner because of the experience. See the first point. So even after retirement, see, government is creating a good opportunity for them. Retired officer of commercial tax department of any state government or CBSE who during the service under government has worked in a post not lower than the rank of Group B gazetted officer for at least 2 years. Sir, who is a Group B gazetted officer? Green ink holders. Green ink holders means superintendent or assistant commissioner, that category. Because inspectors will be there. Inspectors will not be having the gazetted officer rank. Okay. So, Group B gazetted officer for a period of at least 2 years. Or you have enrolled as sales tax practitioner in the earlier law and you are continuing in the GST. Because for sales tax practitioners also at that time, 10th was only the qualification. Then has acquired any of the prescribed qualifications. So, tell me 2 cases, even without degree they can become GST practitioner. Who are they? Retired officer in Group B position at least for 2 years or enrolled sales tax practitioner. So, you understood the first part now? Who can become GST practitioner? What are the activities that they can do? They can apply for registration. Okay. So, they can go to the portal, fill in the details and apply for registration. After registration, they can file the GST returns. After that, they can make payment of taxes. If they paid excess tax, they can get refund. Okay, easily remember pa. First, registration. Next, returns. Next, payment of taxes. If excess paid, refund. You understood these 3? Then, suppose if officer is calling, they can go and appear on behalf of the client, act as an authorized representative. You understood? Next, they can make application for opting composition scheme or withdrawal from composition scheme. Actually, this is connected to registration. They can go into composition scheme or withdraw from composition scheme on behalf of the client. Then they can do data entry for generation of e-way bill. They can generate e-way bill. And they will give the details of goods sent on job work, receipt from job work, ITZ4. Usually not all goods will be manufactured by me. Some goods I will get it on job work basis. So, goods sent on job work, receipt from job work. And they will make application for unique enrollment number. To whom unique enrollment number? Transporter, warehouse keeper. So, these are the activities that can be done by a GST practitioner. Tell me pa, what are those activities? Total 8 activities, come on. Registration, returns, pay tax or claim refund, authorized representative, composition scheme, application or withdrawal. Next, e-way bill, job work, e-way bill, job work. Finally, UEN, unique enrollment number for transporters and warehouse keepers. 2 questions over. Now, one generic information. Any return filed by the GST practitioner, who should be made responsible? GST practitioner, na? No. Any return filed by the GST practitioner, if there is any error, the registered person is only responsible. Okay. So, GST practitioner, listen, GST practitioner before filing the return should show the return to the registered person and the registered person should accept, then only this return will be filed. I have one basic doubt. If the registered person is knowing, he himself will file the return, why he need a GST practitioner? Correct or not? See there, when a registered person opts to furnish his returns through GST practitioner, such registered person gives his consent in prescribed form to prepare and furnish the return. Before confirming submission of any statement prepared by GST practitioner, ensure that the facts mentioned in the return are true and correct. Who should ensure? Registered person should ensure. The responsibility for correctness of any particulars furnished in the return or other details filed by GST practitioner, underline, shall continue to rest with the registered person. So, the responsibility for correctness is with the registered person only, not on GST practitioner. With this, we completed GST practitioner also, only one section. Section 48 GST Practitioner. And with this we will stop for today, and in tomorrow's class agenda is we will be completing place of supply, and then there is one more area called time of supply. Place of supply, time of supply we will complete, and then we will be starting with input tax credit. Tomorrow we are going to discuss a very important chapter, that is input tax credit. Thank you, we will meet tomorrow.